Hmm. Yeah, it does look like a minute chart, doesn't it? Hey, what's up, Alfred? Well, I don't even got. I'm not even logged in. I'm not even logged in. So yeah, I guess today is just not one of those days. I'm just gonna let the market set up on gold because gold is just trending down at this point. I'm just gonna let it set up. Uh, all the setups happened when I wasn't even looking at the chart or overnight, and I'm not gonna be fighting gold. So I don't think nothing's gonna set up because I mean it's just been trending down, and it looks like it's not gonna stop. So I'm just gonna just wait on it. I'll just focus on the orb today. I got an Apex account that just activated, so I'm actually going to use this account and not actually a the sim. I'm going to use this account right here. Yeah, I'm gonna make sure that I have the. Of course, of course. All right, so make sure Powell testifies. Make sure that we keep that on the ready. Make sure we keep that on the ready. All right, man. But how you doing today, Alfred? Was you able to catch this pump last night, or did you sit it out? You got stomped. Damn, what happened? I shit. All you had to do was go. Dude, what happened, man? Yo, what's up, Santiago? Hmm. Oh wow, dang. 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 Huh. Yeah. Yeah. Hold on. Did we just get, you said that we just got some news, Santiago? They said that they're not going to stop the nukes. I mean, yeah. Yeah, Smith was able to catch that long last night too. I don't think anybody believed that Iran was going to stop their nuclear program. Hold on, is he already testifying already? Is Powell already testifying? It says, hold on, is Powell testifying already? Damn, he went to sleep at 3 a.m., dude. What happened? Is Powell just making statements? Where is he making these statements at? So apparently at 7:30, Powell is saying a lot of stuff. Financial Juice is saying that Powell stated at 7:30 that we are well positioned for the time being to wait to learn more about likely course of economy before adjusting policy. The economy is solid despite elevated uncertainty. Increased tariffs likely to push up on inflation and weigh on economic activity. So it seems like maybe this thing is recorded and we're just seeing the recording of it, because these statements looks like he's already like he's answering questions. Yeah. And it looks like our boy Powell, it looks like he's testifying. He's talking to somebody. Or yeah, he's talking to somebody. Or maybe that they might just have like an open forum or something like that, and maybe this is what this is.
Inverted suggests initial signs of that process re-emerging over the last year. If the recent trends in flows persist, then we may see signs of a more substantial weakening in the labour market emerging, which would risk unemployment rising more over the next year than in the MPC's base.
Yeah, so that might have been what that was. Who knows? All right, so we're about to get that 15-minute orb. It looks like so if I'm going to be a betting man, if I'm going to make a bet, I think the orb goes to the upside. I think we're going to get a break to the upside. And I'm gonna do a 5 lot. I'm gonna do about a 5 lot on this. And bump that. I want to do a 9 lot on Nasdaq. I'm doing a 9 lot. Ain't no point being scared. Now the orb has been working for the last what, Friday and yesterday. If this thing comes out of nowhere and super fakes out, honestly, I wouldn't even be surprised. I wouldn't be surprised, man. This is the Nasdaq we're talking about, so I wouldn't be surprised. And maybe that's what it is, man. Maybe my belief in it. So far, this is the range right here so far. So that's the low. We're going to see if it's going to make a high. We got about what? A couple more minutes? 3 more minutes? Or did you? Mm. The Nas crack. Shit, I said I'll never trade this bitch again, and here I am trading her. I like, dude, I really don't even remember putting that 18 tick chart on. I really don't remember that shit. She possessed me somehow. I added the chart back on, and here we are trading the orb on Nasdaq. Just when you think you're done, you get called. You get called back. Shit. I think my hiatus from the Nasdaq has done wonders. If I can be patient on gold and ES, then I can be patient on the Nasdaq. See, and this is why I'm not going to trade gold today. It's just trending down. It's not even pulling back to decent areas to even short. I wouldn't short this on a normal basis. I'm not even going to short this today. So I'm not going to trade my other account today. My smaller accounts, I only trade gold on those accounts. I've blocked Nasdaq trades on those accounts. Oh, here we go. Here we go. But when gold acts like this is where you can either, if you're on the right side of this, you're making a lot of money, and if you're on the wrong side of this, you're blowing your account. So I'll just come back tomorrow, later on tonight. I'm pretty sure the market will set itself up by then. All right, so we got 1 more minute. 1 more minute. And then the opening range will be complete. But I'm probably going to wait for the pullback to the 21 EMA anyway. All right, so far that looks like the that's going to be the high right there. So far, that's what it looks like. All right, it looks like that's going to be our range. There we go. All right, so our range is locked in. Our range is locked in. All right, I want to kind of do a test trade on this. We locked in. I'm attach it to the 21. Okay, so it was attached to the 21. All right. All right, we're locked in. Let's see what she does. We'll document it. That's the high and the low of the range. What she likes to do is to fake break out, pull back to the 21, and then go. So let's see what she does here. I'm currently on a 9 lot on the Nasdaq. A 9 lot. This is an account that we're not tracking this account. I don't think I'm going to trade that account today. This account reactivated. So instead of doing this in the sim, I'll be taking only one trade. I will only be trading the orb setup in this account. And it'll just be one trade a day. Just the orb. And that's it. All right, so there's your break. There's the break of the range. right? Looks like it swept the liquidity above that range so far. All right, so if it's going to behave as it has been in the last two sessions, we should see a pullback to the 21 EMA. We should see that. So let's see what happens here. Hey, yo, what's up, Investor Z? I think so. I think so. I think so. And the reason why I say that is because, I mean, this is not the first time. I mean, at this point, the market knows what Powell is going to say. It's just that retail is uncertain. We had this big move overnight. So what's likely to happen is if we don't see a continuation, well, we have enough room for the downside. And we're going to definitely have a lot of retail chasing it for sure. Because whatever news that the market got yesterday, we was actually going to get price to actually go down, and then out of nowhere we had this big reversal. Now we understand where this reversal came from. So the bears didn't finish their rotation yesterday, so I kind of expect a big correction down. Don't know when that's going to happen, but I do expect that correction to happen eventually, because we all know that when we get price action like this on the Nasdaq, it's going to come down just the same, if not harder. So we'll see. So far, we haven't gotten a break of that range yet. I mean, we got a break, but yeah, we got a break to the upside. And of course, of course, of course, of course, at least right now, we're not getting that pullback. Let me look at the volume right now, because maybe that's what it is. Maybe there's not enough volume in the market right now because of Powell. Yeah, look at that. We're only trading 500,000 contracts right now. The ES is actually trading at a decent volume. Let's actually look at the ES. Maybe the orb is better on the ES. Yeah. And that's the orb on the ES. All right, here comes the pullback. We'll see what happens here. All right, I'm in. Mm. So this time the Nasdaq pulled back to the 200 EMA. If this is successful, it broke the 21, it broke the 50. We saw a slight reaction at the 200 EMA. But actually, you know what? Actually, did that happen yesterday? Because I do got to remember that I'm not on. Well, uh, damn. Damn. Mm, damn. No, I didn't actually trade the break. I actually tried to be cute and trade the 21 EMA test. Of course, it didn't work this time. Or yeah, it didn't work this time. Or maybe maybe it's gonna break below because I'm looking at the ES and I was like, I mean the ES don't look like it's about to break back above that trend line. That trend line has been the bane of ES traders' existence since last night. They've been trying to push away from this trend line, and so far they've been unsuccessful. Mm. So we got price sweeping the liquidity above the range. Mm. All right, 5 o'clock or 5 minutes into the 9 o'clock algo here. Damn, dude, what the fuck? What the fuck? Really? Damn. Huh. Hmm. Well, that account's gone. You know what, Nasdaq? You know what? This is why I don't trade you. That's exactly why I don't trade you. This is why I don't trade the Nasdaq anymore. It's just this type of shit right here. That's the type of shit I'm talking. Yo, that's fucking crazy, man. That is crazy. Damn, she couldn't. She didn't want to see me win. God damn, that is. Oh my god, that's crazy. Ah, man, that's freaking crazy, man. Mm. That's crazy. Mm. Mm. I guess your boy Sherm couldn't win the day. That would actually hit my. That would have hit my target. I would have got my money back, but I guess she didn't want to see your boy get his money back. That's fine. That's fine. God damn. Uh, yeah, congratulations on that, man. I guess so. I guess as K Trader says, that's a part of the strategy. You got to wait for the pullback and then the entry, huh? Hmm. All right. So we'll see what she does here. So she faked high. So after sweeping the range high, she pulls back. She breaks the 21, 50, and 200 EMA. So this will be the, see what the low of that candle is. 260. So the trigger would be 261. It needs to break, pull back, and then the entry would be 261. But technically, what is this? What's the high of this candle? The high would be 327. So the entry would be 328. Because if we do see price shoot up, that will be the second break right there. All right, so I guess it's important, man. I guess it's important to wait for that pullback and wait for the second trigger. This candle right here was nasty. That was a nasty candle right there because what this did was if you had your entry right at that range breakout, it triggered you in and used your stop. That's kind of nasty right there. That's nasty. That was nasty. Uh, man, I want my money, and I want my money now. Really? Mm.
Stand by to launch. Committee on Financial Services will come to order. Without objection, the chair is authorized to declare a recess time. This hearing is entitled the Federal Reserve Semi-Annual Monetary Policy Report. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I now recognize myself for 4 minutes for an opening statement. Good morning. I want to thank Chair Powell for joining us today. We appreciate your time and look forward to hearing more about the Federal Reserve's outlook on economic and monetary policy. There's been a lot of rhetoric lately, particularly from our friends across the aisle, suggesting that Republicans in the Congress are steering our economy toward a recession. However, the facts tell a different story. 4 months into the Trump administration, American workers and taxpayers are already benefiting from a strong, resilient economy. The Fed noted that growth is solid, and even former Fed officials have dismissed the idea of a recession this year or is near. Compare that to the previous administration. Under President Biden, Americans endured the highest inflation rates in decades, driven by reckless spending and misguided policy decisions. Now, under the Trump administration, inflation has declined to levels lower than those seen before President Biden's flawed so-called American Rescue Plan, and real wages are finally meaningfully growing again. There's always some economic uncertainty when the United States engages in difficult negotiations necessary to secure more open markets for American goods and services. But that uncertainty is not without a strategy of balanced lower regulatory costs, pro-growth tax policy, and controls on federal spending, all combined with trade successes offer economic opportunity. One Fed official, Governor Waller, has outlined how a balanced approach combining potential tax rates with targeted tariffs could foster strong economic growth. Let me be clear on that point. We can fight to open markets, break down non-tariff barriers while achieving solid economic growth at the same time. That's President Trump's goal, just as it was for President Reagan in the 1980s. I also want to commend you, Mr. Chairman, the Federal Reserve, for taking positive steps to keep politics out of the Fed, including disbanding 4 internal climate-related committees and making the Fed leaner and more efficient by right-sizing your workforce across the system. These moves reflect a commitment to efficiency at the Federal Reserve. I'm also pleased that Governor Mickey Bowman has been confirmed as Vice Chair for Supervision at the board. Governor Bowman has been a tireless advocate for community banks, and this committee is eager to work with her on policies that enhance our banks' ability to provide greater access to capital and services for our families and businesses across our nation. I look forward to today's hearing, and I yield back the balance of my time. I'll now recognize Mr. Foster on behalf of the ranking member for 4 minutes for an opening statement.
Thank you, and I will save everyone a little bit of time. Chair, Ranking Member Waters was unavoidably detained. I'll just say a little bit that the markets have kind of spoken on their confidence in the Trump economy. Probably the single simplest metric of that is that the U.S. dollar is down roughly 10%. Okay, this is not a small thing, and it has caused countries around the world to question the primacy of the U.S. dollar going forward. This is one of the worst market responses, I think, to the chaos that we're seeing, the tariffs that are very destructive to international trade, and just everything that the markets are seeing and trying to suffer through. I know I'm contacted all the time by businesses in my district, manufacturing businesses that can't even start thinking about investing with the level of chaos just from the tariff policy alone. Anyway, there's a long set of things we should be talking about, and I'm happy to save some people some time, and let's get to it. Yield back.
Gentleman yields back. I recognize the Chairman of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Lucas, for 1 minute for an opening statement.
Thank you, Mr. Chairman. Today's hearing will allow us to evaluate the state of the economy and review the FOMC's policy decisions. It's appropriate to regularly take a step back and assess the central bank's performance and its responsiveness to the economic conditions our constituents face back home. This hearing is particularly timely conversation as the Fed wraps up its 5-year framework review, including a thorough look at the consensus statement, communication strategy, and other guiding policies that will have a profound effect on the lives of every American. Many of these topics we'll discuss today, we've taken a closer look at in the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force. I look forward to building on these conversations here. One issue that I think warrants special attention is the binding nature of the SLR and ESLR on the Treasury market intermediation. I'm glad to see the Fed is looking into this tomorrow, and I hope we'll see meaningful action soon. Chairman Powell, thank you for being here. It's critically important that Congress and the central bank have an open dialogue.
I got tagged into the org on the
Honest
ES.
communications are pillars of our system's success. I look forward to your testimony on the state
All
of the
right, so we'll see
economy,
what happens here.
Fed's plans for the future. And I yield back, Mr. Chairman.
Gentleman yields back. I recognize the ranking member of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Vargas, for 1 minute for an opening statement.
Thank you very much, Mr. Chairman and Ranking Member, and thank you, Chairman Powell, both for your years of public service and for being here today. Since 1977, the Fed has been tasked by Congress with its dual mandate goals of achieving both maximum employment and stable prices. Unfortunately, this administration has made accomplishing these goals more difficult. In the Fed's most recent summary of economic projections, we see a forecast for slower growth, stickier inflation, and rising unemployment, all of which point to a potential stagflation scenario. Whether it's the president's indecision on trade policy, his hiring freezes impacting the collection of economic data, his ballooning of the deficit to cut taxes for the wealthy, or his name-calling, all of these actions make it tougher for the Fed to do its job. I look forward to your testimony today, Mr. Powell, Chairman Powell, and I yield back with that.
Gentleman yields back. Today, we do welcome the testimony of the Honorable Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Chairman Powell, we thank you for taking time to be with us. You'll be recognized for 5 minutes to give an oral presentation of your written testimony, and without objection, your written testimony will be made part of the record. You're now recognized for 5 minutes. Mike.
Thank you, Chairman Hill, Ranking Member.
Yeah, I definitely
And other
agree.
members of the committee. It's great to be back here today. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American
This definitely show. Oh, actually, I'll shut up.
Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains. The market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. We are attentive to the risks on both sides of our dual mandate. I will review the current economic situation before turning to monetary policy. Incoming data suggests that the economy remains solid. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment in recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged a moderate 220.
If I get stopped out here on the ES, then
The unemployment rate at 4.2% in May remains low.
And we
and has
followed the
stayed in a
rules. We
narrow
waited for the
range for
pullback on
past
the
year.
ES. It
Wage
broke.
growth
I
has
got
continued to
triggered in,
rise
and then it
while
just
still
came right back
outpacing
into it.
inflation.
So we followed the rules on the
Overall, a
ES.
wide set of indicators suggests that the conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow longstanding disparities in employment and earnings across demographic groups. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data
I think
indicate that
on
total
days where there's
personal consumption
news,
expenditures, or PCE,
where the market
prices
is
rose
not fully
2.3% over
participating,
the 12 months
maybe
ended
that should
May, and that,
be added
excluding
as a
volatile
rule
food
as
and energy
well to
categories, core
not
PCE
necessarily take the
prices rose
orb, but if there's
2.6%.
news around the orb,
Near-term measures of inflation
then maybe we
expectations have
should
moved up over
consider
recent
that.
months, as
I think it will probably be
reflected in
best. Look
both
at the
market and
volume around that
survey-based
time
measures.
and consider that. I think
Respondents to
that's probably
surveys
what
of
we
consumers,
should
businesses,
do
and
moving
professional
forward.
forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy
Cave
actions
Trader says
are
that shorts is
guided
not
by our
a
dual mandate
profitable
to promote
strategy on
maximum
orb. So
employment and stable prices
I
for
guess
the
he's
American
saying,
people,
so
with
if
the
it's
labor
not a
market
long
at
on the
or near
orb,
maximum employment and inflation remaining
your back
somewhat
testing
elevated,
shows that the
the Federal
longs
Open
are more
Market Committee has
profitable.
maintained the target range for the federal funds rate at 4.25% to 4.5% since the beginning of the year. We've also continued to reduce our holdings of Treasury and agency mortgage-backed securities, and beginning in April, further slowed the pace of this decline to facilitate a smooth transition to ample reserve balances.
Oh yeah, it definitely is.
Continue to determine the
Moving
appropriate
forward,
stance of monetary
once we get
policy
this
based on the
strategy
incoming
down
data, the
packed,
evolving outlook, and the balance of risks.
this will be the
Policy
only
changes
trade that I
continue
take
to
on the
evolve, and
Nasdaq.
their
I
effects on
really
the
don't
economy remain
have
uncertain. The
any
effects of tariffs
desire
will
to
depend,
trade the
among other things,
Nasdaq
on their
and its
ultimate level.
inconsistencies. Not at this
Expectations of
point
that
in my
level,
trading
and thus
career.
of the related economic effects, reached a peak in April and have since
Now my
declined.
goal is longevity.
Even so,
I've
increases in
completed
tariffs
everything
this
else
year are
in this
likely to push
trading
up
game so far.
prices and weigh on economic activity.
Had multiple
Effects on
payouts,
inflation could be
became a live
short-lived,
trader.
reflecting a one-time
The only
shift
thing
in the
that
price
I
level.
haven't done
It's
is
also possible that
kept
the
an
inflationary
account
effects
longer
may
than a
still
damn
be more
month.
persistent. Avoiding that would depend on the size of the tariff effects,
So
how
that's not
long
my
it
new
takes for them
goal,
to pass through fully into
is to just
prices,
make
and
consistent
ultimately on keeping longer-run,
gains, compound the
longer-term inflation
compound the
expectations
account,
well anchored.
and keep it for as
Our
long as
obligation is
possible.
to keep longer-term
That's my new
inflation
goal now.
expectations well
And the
anchored and to
Nasdaq,
prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates.
the
keeping
Nasdaq
in mind that
requires
without price
sacrifice,
stability,
and you have an
cannot
account that
achieve the
she
long
wants,
periods of
she will
strong labor
take it.
market conditions that benefit all Americans. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. To conclude,
Well,
we
ES.
understand that our actions affect communities,
Well, I guess
families, and businesses
the
across
orb traders for
country.
the ES right
Everything we
now,
do is in service
I
to
know
our
they're
population.
crying because there's like,
We at the Fed will
wow,
do everything we can to
they
achieve our
didn't even get a
maximum
push to the
employment
damn
and price
200
stability
EMA
goals.
at least.
Thank you. I look forward to your questions.
Thank you, Mr. Chairman. We'll now turn to member questions. I
Well,
recognize
I mean, if
myself
it
for
pops
5
up
minutes for questions.
past this
Over the
50
past
EMA,
few
then,
weeks, our
I'm
Democratic
wrong.
colleagues have suggested
But the one
following
thing that I
after
want to point out about the
initial
ES
release of the
is that I'm
GDP
only down
report, the president is driving the
$2,500.
economy into a
And
recession.
what is this?
Chairman
I'm
Powell,
only
the
down
latest
6
FOMC
points on the
statement
ES,
described that
which
economic activity had
is
continued
extreme as
to
a stop.
expand at a solid pace, and you just reiterated that in
This is
your
what I'm talking about, the
testimony
the
this
profitability
morning.
on the ES,
In your
where you
view,
can
is the
have a
term
lot of
recession
size
and the
in a
economy
small
growing at a
stop and make a
solid
lot of money
pace,
on
are
the
those
ES.
synonymous with each other?
I would say no.
I'm only down
You
$2,500. Y'all
note
saw I was
that
down like
the
4 or
labor
5K
market
on the
continues
Nasdaq,
strong, the
being
economy's
wrong.
at a standard pace. And you also referenced in your testimony that first quarter GDP initial react was also from front-end loading, as you noted, imports.
So the bears got to
to try
hold the
to
50
avoid
EMA on
tariff
the ES.
impacts.
If it pushes past
Also,
it,
I
then I'm
looked at
wrong.
the Atlanta Fed GDP Now model, which forecasts GDP growth for the second quarter of this year at nearly 4%, with core GDP forecast at 2%. Does that Atlanta model suggest a recession to you?
No, I would say it doesn't.
So, in looking at your remarks about tariffs
So the
today,
reason the
and
orb
then
is at
the ones that you
70% of
made
the
during
time,
March
market goes
and
up.
April,
You're avoiding
Um,
some
I
takeouts,
was
so
looking
the
back
math makes
at
it profitable.
a Fed study that noted that
Or
up until March, tariffs have
avoiding
already been
some fake outs
partially
is probably
passed
what you
through in
probably meant.
consumer prices, leading
The
to a
math makes it
contribution of
profitable.
merely 1/10 percentage point increase in core PCE prices. And a Harvard study last week showed that prices have only modestly adjusted since the announcement of tariffs. Finally, the longer-term inflation expectations remain consistent with the 2% goal. Governor Waller laid out a pathway that allows for rate cuts provided that average effective tariff rates remain close to 10%, or I assume he means 10% or lower. The labor market remains solid, prices continue to disinflate. So given that data I've outlined, I'm sure data that you're very familiar with, for the
Santiago
economy
says
to
that
avoid
we're having
persistent
higher lows
inflation,
each
do you
time. Wait
concur
for the
with
breakout
Governor
above the
Waller that
15-minute
there is
candle.
a pathway for
Yeah.
good news
Well,
as it relates to the regulatory policies,
nice fake
the
out
tax
there,
policies
ES.
that I
Nice fake
discussed
out. Nice
in a
fake out.
world with
Okay.
lower tariff rates?
So first, I wouldn't comment on any other FOMC members' comments one way or the other.
All right.
But I will say this. I think many paths are possible.
Now we'll
here,
see
and
if we'll get
certainly
the
one
breakout to the
you
upside.
mentioned is a possible one. We could see
It'll be
inflation
absolutely
come
dirty
in
if it
not
breaks
as
out to the
strong as we
upside and then it
expect.
comes right back into the
And
range.
if
That would be
case,
dirty.
That would tend to suggest cutting sooner. We could see the labor market weakening, and that would also suggest cutting sooner. On the other hand, if we see inflation coming in higher, or if the labor market were
Investor Z
remain
says he's
strong,
waiting on.
then
So
we
he
would
grabbed the
probably be
long at
moving later. So I
304.
think
So
a
you're
range
already in
of
this.
possible paths are
Started with one
possible, and certainly
con,
the one you mentioned
waiting
is
on the
one.
break and the pullback to add more. Okay.
In February of 2021, you told us in this committee that you would stay in your lane and not comment on President Biden's proposal for the American Rescue Plan or sharply increasing federal spending.
Oh, has it?
And, you said it was an issue, but that you would stay in your lane and not comment on
That
it.
sounds
But
like the
here
Nasdaq.
This year, you have commented on this idea of tariffs being set by
That
the
sounds
executive
exactly
branch.
like the
So
Nasdaq.
are tariffs in your lane, but a huge fiscal spending by the Biden administration not in your lane? Explain to the committee why you chose to be silent in February of 21, but outspoken this spring.
Sure. So we haven't commented, and it would be inappropriate for us to comment on the policy of tariffs. We don't have a view. It's not our job, and we just wouldn't do that. And just as we wouldn't comment on the reconciliation package that you're working on right now. We're not commenting on tariffs. What our job is inflation, keeping inflation under control, and also keeping maximum employment. And when policies have what appear to be short and medium term implications, meaningful implications for that, then they kind of, not the policies themselves, but the inflation becomes our job.
Yeah. My views on price stability. I think it's a first among equals in your dual mandate. I've argued for that. I've introduced legislation to make the dual mandate the sole mandate.
Oh, yeah,
We've talked
yeah.
about that before, but I was very curious about your thoughts on former president of the Cleveland Bank, Loretta Mester's quote that I read from last fall. She says, "I think that maximum employment is the maximum level of employment consistent with price stability." In other words, she elegantly ties that together, that price stability is what you can have more control over rather than all these other factors that enter the employment picture like legislative and executive branch. What's your thought about her quote?
I personally think that's a very reasonable way to think about it.
Thank you very much. I yield back. The gentleman from New York is recognized for 5 minutes.
Thank you, Mr. Chairman. Good morning, Mr. Chair, Chair Powell, and thank you for being here. Last week, the FOMC decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. While I was not surprised by the decision to hold rates steady, I was surprised by the committee's revised forecast since March, which represented a decrease of 0.3 percentage points.
Yeah, you didn't
for
get a
GDP,
pullback on Friday.
a similar increase for core PCE,
They
and
just
an
crashed out on
uptick
Friday.
in the unemployment rate to 4.5%. Can you explain the incoming data that the committee has seen since March that caused it to make this adjustment?
Sure. So first of all, these are individual. This is not a committee forecast. These are just individuals submitting their own personal forecasts, and we don't bless those as a committee. But I think people are looking at the incoming data and having a range of different judgments. If you look at the range, if you look at the central tendency, you'll see that it covers quite a wide range. Those are the medians that you're talking about. I think so. Inflation is projected to have moved up because of what we've seen, particularly from tariffs. And I think if you look at other outside forecasters, you'll see very much the same thing.
And
the
what
same is also
data are
true.
you looking for?
Well, we look at the incoming data on, we look at our own forecast, and we ask ourselves what's likely to happen. Monetary policy has to be forward-looking. A forecast is a prediction of what's going to happen in the future.
Thank you. In its statement, the committee announced that it will continue to monitor the implications of incoming data and adjust the stand of monetary policy as appropriate. Some analysts predict 2 rate cuts by the end of the year are still on the table. Is this a fair and accurate assumption? And what incoming data will the committee need to see to consider this cut?
Well, shit. After Powell, every other Fed speaker don't matter.
What will actually happen with rates is going to depend on the path of the economy, and that's highly uncertain. So
After
I would
Powell,
just say what that
any other
means
Fed speaker,
at this moment
we
in time is
we normally
that,
don't see a
a
reaction.
significant majority of the committee, but also there's a pretty significant minority.
It really
that doesn't
depends
agree,
on what
but a
they say,
significant
though.
Majority feels it will be appropriate to reduce
Kind of like
rates
Crash
later
Kari.
this year. And what that means
But then we
is
didn't
that
have Powell that
each of
same
those
day. I
persons
think
who
if we
wrote
didn't,
down
if we had
a
Powell speak that
cut
same day,
in rates
and then
later
Crash Kari
this year,
came out and
we
said
think
what
that
he
there's
said that
some,
day, I don't think we would have
state of the
saw
world
that
where
big of a
inflation doesn't
reaction.
prove to be as high, or the labor market weakens, or some combination of those two things, that it will turn out to be more likely than not appropriate to reduce policy rates, subject to great uncertainty. I mean, we will, the story has been evolving, and our thinking has been adapting, and that will continue.
Thank you. Chair Powell, although a ceasefire has been tentatively reached in the Middle East, the situation still has the potential to open global and energy markets, especially if the ceasefire is broken. While at this point, Iran is seen as unlikely to close the Strait of Hormuz, that decision could change. How is the Fed assessing the current situation and incorporating those assessments as it considers future adjustments
You talk about putting the entry above right here,
projections
33?
and stand on monetary policy?
So I think it's too early to know what any economic implications might be, and I would not want to speculate. Like everyone else, we are, of course, watching the situation.
Thank you. And Chair Powell, after reviewing the economic data following the meeting last week, it seems to me that the committee is indicating that we could be headed for a situation where inflation accelerates while unemployment rises and growth become more sluggish. In this scenario, this will put the Fed's dual mandate of maximum employment and price stability in tension with one another. In this scenario, how does the Fed balance these priorities in order to achieve both mandates?
Let me say that we're not facing that right now, and that isn't really our forecast that we will face such an issue in a serious way. But if that does happen, then what we do is we look at the two goals and we see which one of them is farther from its goal. Two variables, is maximum employment or price stability farther from its goal, and we prefer the one that's farther than its goal. And then we also ask ourselves, how quickly will they return to goal? It's a very difficult situation for any central bank, and I would say again, we're not in that situation right now.
Thank you, Mr. Chairman. Yield back.
The gentleman's time has expired. The Vice Chairman of the full committee, Mr. Heising of Michigan, is recognized for 5 minutes.
Thank you, Chair Hill and Chair Powell. Good to see you again. I got a lot to cover, so we're going to try and keep this concise. But following up a bit on what Chair Hill had been talking about, you had said in January 29, 2025, quote, "We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy." I would add energy into that, by the way. "We need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. This is no different than any set of policy changes at the beginning of the administration." However, December 18 of 2024 at the FOMC press conference, you noted, and I'm paraphrasing, that some Federal Reserve officials began to incorporate preliminary conditional estimates of how fiscal policies might impact the economy into their forecasts. this seems inconsistent. And I sidebarred with the chair to say, okay, did I hear this correctly? His question and sort of your answer. What I heard is that there was a belief that the IRA would not be inflationary, but that tariffs could be. Therefore, suddenly you and others were commenting on tariffs. And for the institution, I know you try to be consensus driven. Why are there FOMC participants making fiscal policy assumptions into their forecasting when you yourself said that fiscal policies need to be articulated before the FOMC can make a plausible assessment into their implications, what those will be?
Yeah, that makes sense,
And
though.
I think if there's different
Yeah, that makes
participants
sense.
having different assumptions, that would render the SEP, Summary of Economic Projections, biased, meaningless, useless, less impactful, and when you're not comparing apples to apples. So wouldn't it make more sense for all the forecasters to make the same fiscal policy assumptions at the same time? Or if not, shouldn't each participant disclose what assumptions that they're using and building into that? So here's the question.
So that's a great question. That really, when the Summary of Economic Projections was originally designed and put into effect in this way, the way it works is that individuals are free to make whatever assumptions they want, and they do disclose them. They disclose them in their speeches and things like that. So there will be situations where some people incorporate something and others don't, and we try to be transparent about that. But that's kind of the way it works. When I say we don't take it into account, I'm really
I'm not
talking
gonna
about
lie, man.
policy and the committee as a whole.
When I don't have any
But
green
we
in
won't
my
take things
account
into
on
account
days like
until we know
today,
And you believe that
the first thing that's on my mind is, man,
disclose
what the
their
what am I
assumptions when they're
doing?
doing
Like,
their forecasts?
there was so much money
Well,
to have been
I
made.
think they do that
Why the
in
hell
their
there's not a
speeches.
green in
Each
my
of the
account
each
right
people
now?
go out, you may have noticed there are a lot of speeches.
I guess the opaqueness of the Fed has been something over the arc of my 15 years on this committee, has been one that has been debated greatly,
Yeah, that's gonna
including
probably be a part of my trade policy,
auditing the
like on
Fed
news
and a number of
days.
other things that have gone on.
News days have just
I've
been
got here a
notoriously.
brief moment. I do feel like I need to touch on interest rates. Not to be a shock, you asked how the family business was doing back
Days
in
where I
Michigan.
don't perform at my best
Families
because
involved
of
in
the
sand and gravel and
randomness.
aggregates and construction and things like that. It's been strong. We need more labor. We need a few other things on that, what's happening. But I mean, I think there's no recession. That's been established. There's no hyperinflation, or certainly not as what some had been projecting. Yet there seems to be higher than expected, or certainly desired interest rates for many of us. And I'm curious how high interest rates, they hurt Americans who are paying car loans, credit cards, mortgages. You had FHFA Director Pulte asking for lower interest rates, which would obviously impact home buyers as well. So what is it that's keeping, in your mind, the Fed from what many of us believe is the right thing to do, which is to lower some interest rates? And by the way,
Hold on,
match
guys.
the
Let me
Bank
get
of
some water
Canada,
real
Bank of
quick.
England, the
Give me a second.
European Central Bank, the Swiss Central Bank, a number of emerging central banks. By the way, that's your own assessment on page 33, as where you're laying that out. Why aren't we doing what the rest of the world is doing? Is it because we're at full employment? Is it because of those tariffs concerns that you said weren't part of the analysis? Was it energy, groceries, durable goods? Why?
So you're right that if you just look in the rearview mirror and look at the existing data that we've seen, you can make a good argument that that would call for us to be at a neutral level, which would be, a couple of cuts or maybe more kind of thing. The reason we're not is the forecast by all professional forecasters that I know of on the outside and the Fed do expect a meaningful increase in inflation over the course of this year. When I said we weren't going to talk about tariffs and inflation, that was to say until we see what the policies are. And so now we know a
Gentleman's
lot more.
time
It's
has
6
expired.
months since I said that. So anyway, I'd be happy to continue this with you.
Thank you.
Gentleman's time has expired. Gentleman from Michigan, Ms.
Mm.
Tlaib is recognized for 5 minutes.
Thank you so much, Mr. Chairman. Chair Powell, last month there was research published in the Journal of Urban Health that found that more than half of Black women of reproductive age, the term they
What
use,
the
in
fuck?
the
Oh my
counties
God.
that I represent, that had experienced some sort of eviction during their lifetime.
What?
So that's like 50% of Black women in the two largest county, Wayne County and Oakland County in Michigan. And these numbers are horrific. As you know, were you aware of that?
No, I was not.
And you know, evictions are often very traumatic experience, but also it creates a cycle of poverty, but also this instability for many families. But especially when it comes to a lot of our Black neighbors, the access to equity, the access to housing is diminished even more. In Michigan, we lost more Black home ownership than any other state in the country during the last recession. So we know the housing crisis, I believe, is structural, and some may say it's a policy choice. While there are many factors at play, and you know this, Chairman, high mortgage rates, the finance rates and so forth, that drag the supply of new housing. But last month, new housing hit a 5-year low. Are you familiar with that?
Are you aware
Not
of
sure
that?
exactly what statistic you are referring to.
Okay, I don't know. There was all this articles about the housing market and the impact of tariffs and so forth, and they said again it hit a 5-year low.
That's why we
Again,
don't
I'm
do
getting this
DEI
from a
hires
source,
right
but
there. That's
this
why.
sets the market up for higher inflation.
She's not even,
and
she's
more
not
burdensome
even,
housing
I mean, if she
costs,
wasn't
to years to
challenged, she was
come.
going
So
off of
Chairman Powell,
articles
you know,
published
I'm looking at this
by
monetary
everyday
whatever
people
policy
versus
framework that you guys have
anybody
put
of
together.
a
Do you
professional writing
think
an
that
article.
the way it's structured, and again, I'm trying to
So
understand
it was
how
great that
you're
Powell
looking at this
challenged
in the
her
housing crisis.
about where
Do
she
you
got
believe
this
it's eroding
information.
new
And
rental
when now that
supply
she's revealed the information, we know that,
under
okay, she's
construction
just
right now,
talking a whole
leading
lot
to
of
high
bullshit and
inflation in
try to
future years?
play identity politics.
I think there are two things going on quickly. One is just there's a longer run shortage of housing in the United States, which there's nothing that the Fed can do about. That's not something we can affect.
Well-
There's also, if I may say,
Because shit,
in the short run,
everybody's
rates
getting
are
evicted,
high,
not
and that's
just
gonna weigh on
one
housing
group of
activity. But
people.
the best thing we can do for the housing
Anybody
market,
that, I mean,
absolute
shit,
best thing is to restore price
anybody that
stability
played the
so that
grasshopper instead of
rates
the
come
ant
down, and so that
is getting
rates can be at a
But
level.
is getting
do you
hit
think
the
that
worst
restrictive
in this
monetary
economy
policy
so
the
far.
framework you all put together undermines long-term price stability right now by reducing the supply?
No, I mean, I think
But you're reducing supply.
restores price stability. The point of higher rates is to, and
You
it
don't think
does
the
affect.
higher rates is impacting future supply of housing?
So I think what that does is, I think interest-sensitive sectors like housing are very much directly affected when we cut rates or when we raise rates. That's right. But that's part of the mechanism for restoring general price stability.
So keeping the high interest rates does not impact future supply of housing?
Does not, over the long.
I need to go back to talk to
Over the long run,
women that the
the
study.
Fed will not be, our policy will not be a driver of longer run housing
Oh,
supply in the United
So,
States.
okay, let me ask you, what is the difference? And honestly, confused. I want to learn here, and I'm sure people listening to this want to learn. What is the difference between demand-driven rent inflation and supply-driven rent inflation? Like, you guys use these terminology. What is that? How do I communicate that to the public? What is the difference between supply-driven versus demand-driven rent?
Those are not terms that we use particularly often.
What's
but
supply-driven formula?
that would mean that there's not enough supply to meet demand. But at the same time, it also means there's more demand than there is supply.
So are you guys ignoring that?
No, but as I said again, our policies will not affect in the long run.
No, I'm being
either
serious, 'cause
demand
I see
or
somebody
supply
behind you
in
kinda
housing.
check- I'm being serious, y'all. We're talking about a housing crisis that is getting worse
I'm being serious,
right now
y'all.
because we're not paying attention to future instability that the current rates, and you can raise your eyebrows and all this stuff behind. I don't know. I mean, do you understand? Like, I come from a
She's embarrassing
community
herself.
right now
She should just stop.
that I
She's
believe
embarrassing herself.
is now being impacted by the current framework that you're putting together, that I do feel like it's going to be long-term effects on the housing crisis, and you're ignoring it.
No, we're not, actually. We think the very best thing we can do is to fully restore price stability at the aggregate level. That will be the best thing for homeowners and for home
Even though the
builders and
housing
everybody else.
supply has been
In
impacted
the
by the
long
high
run, that
interest.
is the single
But
thing
Chairman
that
Powell,
Congress
you
has
see where I'm
inclined us
coming
to
from.
do.
But you see where I'm coming from. It is impacting future supply of housing, right?
Not in the long run, no.
Okay, well,
Gentlewoman's
Mr.
time
Chair,
has
thank you.
expired. The gentleman from Wisconsin, Mr. Stile, who's also the chair of our Subcommittee on Digital Assets, Financial Technology, and Artificial Intelligence. You're recognized for 5 minutes.
Thank you, Chairman Hill. Thank you, Chairman Powell, for being with us today. I want to dive into two actions the Fed's recently taken to get a little additional color on. Yesterday, the Fed announced that reputational risk would no longer be a component in bank exams. I viewed that positively. I viewed the reputational risk as often being a catch-all for political bias.
So
I think
Cave
it's
Trader,
positive to depoliticize bank
that line
exams and instead
represent
focus on
my
the
limit.
core and measurable
This thing
risks.
almost tagged
Can you
me in,
provide colors to whether or not any new
and it did
or,
exactly what you thought it
new
was going to do.
information came to light that led to the decision of the Fed to remove that yesterday?
I'm not aware of any new information. No, we just think it's the right thing to do, and of course made an announcement on Monday under Governor Bowman's, Vice Chair Bowman's leadership.
Why would it not have been done previously if it's the right thing to do? I agree with you, it's the right thing to do. Why was it? Any timeline as to why that was done yesterday versus previously?
No, I think this is a problem that we came to understand as a problem over the course of the last couple of years, and began considering what's going on here. We're hearing a lot of reports of
Yeah, that would have been dirty right there.
that sort of thing.
That
And
would have been
over
dirty.
the course of really 2024.
No,
into
it
years,
missed me
this
by a
was
tick.
serious problem that we need to
So
address, and
this would have been a
we've said that
situation where I've been like,
publicly. Now
man,
we're doing this.
wow, the Nasdaq was merciful.
I appreciate you taking
She
that
was
action. I do
merciful to me?
agree that there were real political
He literally
bias,
missed me
in
by a
some of those
tick.
exams, in particular as it related to regulated entities engaged in the digital asset
Because
space.
if
Let me
I
shift into the
if
digital
I had it
asset
at
space,
my
if I
original
can.
entry,
Another action recently taken
a point
by the
above.
Fed, the
So, but then I thought to
nominal
myself,
activities,
maybe I should do like a
program,
point and a tick
was ended and withdrew several statements on digital asset
above the
related,
range after the
risks
pullback.
that deterred bank involvement in particular. You in the Fed and others at the Fed have spoken positively about the House and Senate work to regulate stablecoin in particular, a real opportunity to dollarize the globe and be a significant purchaser of U.S. Treasuries. Following that action by the Fed, have you seen an identifiable shift in banks or other regulated entities as it relates to engagement in the digital asset space?
You know, I wouldn't be the one to be picking that up first, but what I do see is a very significant change in the tone, and it really does reflect evolving thinking and the evolving status of the crypto industry. And I would expect over time we'll see more activity.
How is the Fed evaluating and overseeing banks or other regulated entities that are in the digital assets?
No, I'm gonna leave it where you said.
Our view
I'm
is that
gonna leave it where
banks get to decide who their
I'm gonna leave it
customers
above
are.
that
It's
high.
not- it's not
A
our
point and a tick
decision.
above that high.
And
Because I think
so banks are free to
I mean, if it
provide
gets that
banking
high, it
services
might
to,
sweep that liquidity and pull back a
crypto
little
industry,
bit, but I
crypto
think it'll
companies.
probably keep going.
Banks are
I mean, at this
also
point,
free
we're already
to
seeing the
conduct
higher
crypto
lows.
activities as long as they do so in a way
We
that
got the
is
higher highs.
protective of safety and soundness.
Thank you very much. Let me shift gears.
We
'Cause I
got the
wanna give
higher
you just a little
lows,
bit of an
so I
opportunity
think
to
right now
comment,
the market is
on-
just,
on the housing,
I guess, waiting on
sector
Powell, I
once again,
guess.
but give you a little freedom here to speak to that area. You correctly are trying to balance inflation and price stability.
We got
but
the
also
tick strike
higher rates
saying
have a
that
significant
the market is
impact,
buying
on the
right
housing
now.
market as
Gold
shelter
is
and
selling
housing
off.
costs, are a significant driver of why many families can't afford the
Yo, that
things
was a
they
nice
need.
little fake out,
Can you provide
ES.
color as to how you're analyzing
That was a nice little fake out. That's
the
crazy.
impact that housing and shelter
The
costs
ES,
have
the
on
ES
families and
faked
on
this out
inflation,
on the orb.
with your
That's
desire to
crazy.
maintain price stability, the interest rates that is currently set by the Fed.
Sure. So, we realize that people are feeling high housing costs and high financing costs. In terms of inflation, we look at something called owner's equivalent rent and rentals, and that's meant to capture both rented housing and owned housing.
Oof.
And it's been very sticky. It's been one of the stickiest parts of inflation. I'm happy to say now it actually is coming down quite regularly. That's very good news. That's been the part, really, it's been the service inflation that's been stickier than other parts of inflation. So that's good news for people, I think, and it is showing through into measured inflation now. Again, in the long run, the best thing we can do is restore price stability and let the market work. Even then, though, we're still going to have a housing shortage.
What data do you think is leading to the reduction of the rent equivalent?
I just think it took time. So the thought is when you would think that if rents come up every year, you would think it would take 1 year or 2 years for a lack of growth in rents to show up in a lack of growth in housing prices. It turns out it takes 4 years or 3 years. If you're an existing tenant, it's a complicated thought, but if you're an existing tenant,
All right,
don't
so it looks
actually
like
catch up the way you would if new
we'll see,
tenants
man.
came in. And so
We'll
that's
see.
made
I
the
mean, it does look
measurement
like
of
the
inflation
Nasdaq wants to break
stickier.
out.
But I'm happy
We
to
do
say
have
we've been through that
all-time
period
highs
now, and
coming
we're
up,
already
man.
seeing now
We have
housing
we
services
almost
inflation
have
pretty
all-time
close to,
highs.
where
We
it
have
was
all this
when
space
inflation
up
was
here.
solidly at 2%.
Thank you.
We have all this space until we even
back.
touch that
Gentleman
trend
from
line.
California, Mr. Licardo is recognized for 5 minutes.
Thank you, Mr. Chair. Chairman, thank you for your testimony today. I appreciate that your dual mandate is full employment and price stability, and I appreciate your efforts on behalf of our country to achieve those. My understanding is that critical data is collected by the Bureau of Labor Statistics to help formulate the indicators that you rely on, that we rely on to understand unemployment rates, CPI, and other inflation indicators. We are certainly hearing a lot about the impacts of DOGE on our workforce, and specifically
Yeah, well,
about the elimination of
I
many
will
of
say
those
that, like I
positions in
said,
BLS.
Smith had to go
Now we
back
have
into
a
office
proposal in
because
front of
freaking
Congress
Doge.
to cut $56 million
He had to go back
in
to
that
office.
agency. Are you concerned about the ability of your team to get accurate data?
So
about the
apparently
ability
on the
to
September
have
contract,
reliable indicators
as crazy
to
as
make
this sounds,
decisions upon?
I wouldn't say that I'm concerned about the
all-time
data
highs on the
today,
September
although
contract
clearly
is
there has been very mild
22,871
degradation of the scope of
on the
of
September
surveys,
contract.
things like that. But I would say the direction of travel is
I
something
don't
I'm
know
concerned
if
about, and that
that's,
is, um,
I know that's not
measuring the
correct,
US
or let me
economy
rephrase. Well,
carefully
actually, I
while
really don't
this
know what to think
project that's
about
been
that,
going on
because I know like on the
veterans
December
for
or
100 years and more.
whichever
And
contract, it was
it's
like
really
at
important, not just for the Fed,
22.4 or
but for
22.6 or
Congress and
something
for
like that.
businesses, frankly, to know what
But
really
on the
is going
September
on in the economy,
contract,
what's happening,
its
is growth
all-time high is
low,
at
and all those sorts of things. So
781.
I think it's a smart investment to just
So,
continue
I
and
mean,
try
I
to
don't
get
know.
better
Do
at
we count
measuring
that
what's
as an
happening in the
all-time
economy.
high?
I don't like to see that, the kind of stories I'm reading and the idea being that the data is going to become more volatile and less reliable. That's
Huh.
that'll make it more difficult
I
for
mean,
the
if
private sector
okay,
and for
I
you
mean,
and for us.
I just
I don't like
trade the
to see that
markets, man.
direction.
I agree. Thank you.
I guess to me, I feel like it doesn't make or it should
Appreciate that
make
it's
sense,
not
but
your
I mean, I
role
guess
to
it
comment
does.
on the advisability of
All right, so
specific
I'm in, baby.
policies,
I'm in.
but given your
So I would
critical
have got,
role
so if I got
ensuring
tagged
price
in
stability,
on at my
and
original
reducing
entry,
inflation, I have had
I would be
conversations
up
with
10 points.
quite recently, just a week ago, with a C-suite
So
executive of a
let's see.
major world global retailer
Let's see if we just could get the
informed
continuation.
me, because I asked, why aren't we seeing the impact of these tariffs and price data yet? And he said, it's coming in the third quarter, because it takes time for tariffs to work their way through a distribution chain. Often what you have on the shelf today may have been imported 2 or 3 months ago. Is that your understanding? Do you anticipate there may be impacts down the road?
Yeah, that's very much what I hear. I happened to meet with an unusually large number of business people in this last FOMC cycle, and that's a typical thing that they'll say, especially the retailers, that what's being sold now was in inventory in February, let's say, and it just isn't showing up yet. So we do expect to show up, tariff inflation to show up more, but I want to be honest, we really don't know how much of that's going to be passed through to the consumers. We just don't know, and we won't know until we see it. It could be lower than we expect. It could be higher. We have to wait and see, which is kind of what we're doing.
I appreciate the uncertainty. Another thing he told me,
I appreciate the
very concerned was
uncertainty.
that,
Man, these guys just
often
need to do a little bit better than
they
what they're
will
doing.
increase prices on goods not subjected
I
to tariffs to
appreciate the
compensate
uncertainty.
for the very
What?
substantial losses they have to suffer
All right.
with the increase of tariffs on relatively price elastic goods. So in other words, necessities will also tend to bear a higher price, even if they're not subjected to tariffs. Is that your understanding of the potential impacts?
That very much is something that companies will tell you that they do. If they can't cover the losses on the thing that's being tariffed, they'll find other ways to do it. We actually don't have prominent examples of that yet, but that's certainly a possibility, and that did happen in the last tariff episode with washing machines and dryers.
Thank you, Mr. Chairman. And finally, there's indications in the introduction of the report that the Fed is losing its ability, as we see interest rates getting closer and closer to the minimum threshold, the ability to stimulate this economy in times of recession. We haven't had a recession, or at least we haven't had an extended recession in a decade and a half. I am particularly concerned now as we are looking at debt that is being considered to be imposed on future generations by this particular bill. Could there be a combination of very high debt and very little room to move in monetary policy that could undermine our ability to respond to the next recession.
So we faced that issue quite a bit in the era of very low interest rates, but we're at higher levels of interest rates now, so there was
Gentleman's time has
significantly more room to cut than there was then.
Thank you.
Gentleman yields back.
Shit, hopefully this
Gentleman
thing
from Wisconsin,
shoots up.
Mr. Fitzgerald, you're recognized for 5 minutes.
Thank you, Chairman. Chairman Powell, thanks for being here today. Appreciate it. I want to go back to something.
It's gonna probably, you know what?
we had
Honestly,
some brief discussions
well,
about this in the past, but in September of 2024,
I wonder if it wants to
with
pull
core
back to the
inflation still being above
21
target
EMA.
and the labor market was holding steady at the time, the Fed made a decision to cut rates by a full 0.5 percentage point. It kind of raised some serious questions.
So you're
as to
long on
whether
two
or
funded
not,
accounts?
the data truly supported such a move.
Where are
at
you
that time.
targeting?
And I think some of us were surprised that it was a full 0.5%. So can you revisit that again, what the Fed was thinking at that time? Because it seems to be somewhat of an enigma now. It stands out as, why was this done? Why was the 0.5% done at that point?
I'd be glad to. So, first of all, actually the inflation and employment readings were very similar then to what they are now. They weren't terribly
True,
a tenth or two.
Right.
But the difference then was you mentioned that the labor market was stable. It wasn't. The unemployment rate had actually gone up almost a full percentage point. I was very clear about this.
You're targeting
We were very clear about it in
432?
real time, too. The concern at that time
432, huh?
was that there really hasn't been an experience.
What's
or hadn't
significant
been an
about that
experience in the
level that you're
modern era
targeting?
in
432?
which
You think
the
we get
unemployment
there
rate has
today?
gone up close to 1%.
432?
That hasn't been followed by much higher levels of unemployment and a recession.
Is there like a
we were
level at
looking
that,
and saying, and remember, at that point,
432?
at the point we're talking about, the federal funds rate was 5.3%, so definitely very restrictive level. We were the last of the big central banks to cut. So we wanted to make a statement that we were supportive of the labor market and not just inflation. We've been focusing on inflation.
All right, so we got the
I
pull back
was
to the
quite clear
21
about this.
EMA.
So it was all about the labor market. Inflation was the same and unemployment was roughly the same, but it was the rate of change with the unemployment rate that raised a lot of concerns. And remember, we were being criticized for being late to cut. So we could have done 25. If we'd done 25 in July, we were criticized for not cutting in July. Instead, we cut 50 in September. And it seemed like the right thing to do. And at the end of the day, we do what we think is the right thing when we think it's the right thing to do. We don't take into consideration political factors. If we start doing that, I don't know where that stops. Once you start considering elections and stuff like that, where does it stop? So
And I didn't want to insinuate that it had anything to do with the election itself, but there just seems to be some very similar numbers right now. And I'm wondering, and I don't bring this up because I want to kind of make a point about did the Fed do the right thing or not. I bring it up because it seems like everything's in place right now to kind of do the same thing, make the same move. I know this morning already, you've talked a little bit about where you were on inflation right now and kind of what you're watching, but is there any lesson there? I mean, are we in a position where it would be appropriate to do something as big as a 0.5% cut again?
Well, look, as I said earlier, if you just look at the basic data and don't look at the forecast, you would say that we would have continued cutting. The difference, of course, is at this time, all forecasters are expecting pretty soon that some significant inflation will show up from tariffs. Now, and we can't just ignore that, but we're just saying let's wait and see more. That's all we're doing. And if you will have noticed, a substantial majority of the committee has written down rate cuts in the remaining 4 years, four meetings this year. So it's just a question of being prudent and careful. But at a time when the labor market is still strong, we don't see weakness in the labor market. If we did, that would change things. We're going to continue to adapt as the data adapt. But that is the difference between then and now. Then, inflation was forecasted to continue to come down. Here, it's forecasted to go up by all forecasters. So, and again, we're not overreacting to that. We're just saying, hey, as long as the economy's strong, we can take a little bit of a pause here. And that's what we're doing. And again, continue to adapt as the data comes in. If we see data that suggests that inflation's not going to produce big increases, that would matter. And if we saw the labor market weakening, that would matter too. But we don't see those things.
What about supply chain? In 2020, that was a big issue, obviously related to COVID. But I know myself and other members, when we're in our districts and we're specifically talking to light manufacturing, there's concerns about the supply chain. Is that part of the data package that you review when you make a decision about where we're headed in the future?
Very much so. I think that's one of the great, well, we'll call it a great thing, but
Gentleman's
one of the
time has
lessons to
expired.
be taken from the last episode is supply chains really matter.
Yeah, I
Watching
saw that. I'm looking
carefully,
at
it's too soon
the
to say really
thing with
we're not seeing
Bookmap, and I see those
we could-
Gentleman's time has expired.
Thank you, Chairman. Yield back.
Thank you, Mr. Fitzgerald.
those
Gentleman
order
from New
blocks,
Jersey,
those
Scott
selling
Hunter,
order
requested
blocks. That's why I
Thank
was
you, Mr.
like, man, let me
Chairman.
just put my
Chairman Powell, as a
let me just move my
member of the
stop up.
Intelligence Committee, I'm deeply concerned about
We
the
got this
threat of
trend
Iranian
line.
cyber
If they
attacks on our
break the trend
financial
line,
system
they're just going to
as
use the
retaliation for
stops
our strikes on their
to
nuclear
fuel this thing
facilities.
right back
In the
down. And
cybersecurity report last year, the Fed acknowledged that critical infrastructure, including financial services, is at risk with rising geopolitical tensions. Iran has a history of targeting American infrastructure
yeah,
companies and financial institutions and banks, which could obviously threaten and cause economic damage. What actions is the Fed taking now to monitor and defend against Iranian or proxy cyber threats targeting our country's financial institutions?
So we're in touch with
yeah,
the other regulators and the parts of the government that work
yeah.
on
It's crazy,
cyber,
man. The market
as
literally
you
just
know,
traded in
and
the
we're in touch with the banks
in the
to
opening
say,
range. I
for
feel
people to be
attacked,
on the
man.
alert
I
for
I I, I
things
literally
like
feel
that
attacked
happen. And
today.
also we're on the alert because we're a target as well. So
I
we'd like to
mean, the
raise it.
orbs we
It's
take in
a
the
big
sim,
issue, and
Do you feel like you have the resources
mechanical,
right now to be
beautiful,
prepared for that?
whatever.
yes,
And I know that we
think
had Powell today, but it's
we
crazy
spend
that
a
it's
lot.
like, okay, yeah, I'm ready to
Government
take
generally
this in
spends a lot on
a
these things, and we've
in an eval.
you can never ever
That
be comfortable in this area
that's
because the
anyway.
bad guys are always getting better.
And all of a
We need to
sudden
keep
now
it
this thing is struggling.
Thank
Like
you, Chairman. Switching
I
gears,
feel
the
attacked.
President and members of his
I feel attacked.
administration have recently called you out, various name calling for certain decisions you've made. I know there's
Yeah,
some
he
people worried
definitely
that the
is, man.
president's bullying
The
will
Nasdaq
impact your
literally traded in
decision-making.
this
I know
range.
you work together, and I know that and respect, obviously, your independence greatly. Anything you want to add and give you a chance to reiterate your independence to the American people?
Yeah, I would just say we're focused on one thing, and that is we want to deliver a good economy for the benefit of the American people. That's it.
I do
And
s- I do see
anything
on
else is kind of a
Bookmap that
distraction. I don't mean to refer to any
there is
particular
a
thing, but
liquidity, a
we
lot of
stay
liquidity
focused on
sitting
that
at
task all the time.
500.
Always do what we think is the right thing to do, and we live with the consequences.
Don't
And
know if that's
I don't
just
know
a
how else to
trap
do
for
the job.
buyers, but
Right, so the name
I think the
calling,
buyers
Mr.
are going to
Too Late,
keep
and all that
buying until we
stuff.
get to 500. So
The American people shouldn't worry
we're
about that.
not
You're
too
focused on
far
being
off from that
independent.
number.
Just, yeah, that's what I care about. I care about doing the job for the American people. The things we do matter a lot for people's lives, and that really concentrates the mind. You want to just stay focused on that task. As long as you're sitting in these chairs that we occupy, focus on that task, do what you think is the right thing, and take the consequences.
Thank you, Mr. Chairman. You've previously stated that you view stablecoins as a form of money. Payment stablecoins are already being used for both retail and wholesale payments, as well as for settlement. Recently, this committee passed the Stablecoin Act and the Senate passed the Genius Act, both aiming to establish clear regulatory frameworks for fully reserved dollar-backed payment stablecoins. Given their design to maintain a stable value and be redeemable for U.S. dollars, should the SEC or other regulators explore treating these stablecoins as cash
Well,
equivalents for
that
accounting
does
or
look like a
financial
nice
reporting purposes?
short setup on gold right here.
Let me say, I
Have
think
price,
it's
have
a
the
great thing
buyers
that,
fail to
that
push
bills
it
are
off the
moving.
trend line,
We need a
and then they
stablecoin
come right
framework on
back
that
into
particular issue.
the channel.
I don't have a view for you. I can come back to you. on
That does look like a good
I'd be
short, but
grateful.
I'm not taking it.
Thank you. High rates have also caused, as we've discussed, the cost of paying off our nation's debt to skyrocket. The CBO estimates that interest payments will cost the U.S. $1 trillion in fiscal year 2026 and continue to rise to almost $1.8 trillion by FY 2035. How do you see us continuing to be able to afford to pay off our debt at this rate? And as the U.S. continues to borrow, how does that impact your decision to keep or cut rates? Obviously, foreign countries like Japan, who are significant buyers of our bonds, have started decreasing their purchases significantly. Other internal pressures worldwide are having that impact. Are you worried about this global issue?
Fiscal policy and it really is not our job, and it's not something we take into consideration in making monetary policy. That's
Oh,
really
shit.
elected
Oh, yeah,
people's
you're right.
jobs. And
You're
and
absolutely
I would
right.
add that, for some time now, the U.S. federal fiscal policy has been on an unsustainable path, and I'll limit myself to that.
Last question. Last week, you chose to keep rates steady, and families in our state, as you'll hear from a lot of people today, are really struggling with the higher cost of borrowing and putting off bigger purchases on things like cars and homes. As a result, their wallets being crushed by these price hikes and obviously the president's tariffs. What do you have to say to Jersey families who are struggling with higher costs, and how you look at how they should forecast themselves for their own families?
We're committed to returning inflation sustainably to 2% and keeping it there in the long run. And what we're doing now is we had cut rates by 100 basis points, so they've come down quite a bit. And when the time is right, I expect that will continue, and that will depend on economic factors, in the coming months for starters.
Thank you. I yield back. Thank you, sir.
Gentleman yields back. Gentleman from Nebraska, the chair of our Housing and Insurance Subcommittee, Mr. Flood, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, later this week, the banking agencies will be proposing changes to the supplementary leverage ratio, which we think are long overdue, considering the Fed in 2021 indicated that they would soon put out proposals for reform to the SLR and never actually did. However, our understanding is that the proposal being considered this week will not allow for treasuries to be excluded from the SLR calculation. Secretary Bessent earlier this year had argued that such a change could serve as a boost for banks and their ability to intermediate in the treasury market and could potentially pull treasury yields down 30 to 70 basis points. Chairman Powell, do you agree with the Treasury Secretary's comments on the potential positive impact of SLR reform on the treasury market? And what is the rationale for not excluding treasuries from the SLR calculation in the proposed rule?
So I agree that when the leverage ratio is binding, it discourages
you
banks
can't.
from
Man.
undertaking low margin, fairly safe activities such as mediation. with
Wow.
treasury. So this should encourage more mediation.
Wow.
I don't have a numerical estimate of how much that would matter, but I do think it would matter. I think it was important. I've supported leverage ratio reform for a very long time, since before 2021.
Chairman,
in terms of the structure of the thing, I think we're seeking comment on a particular proposal that doesn't involve exclusion, but we're also asking a question about exclusion.
Mr. Chairman, considering the Fed temporarily excluded treasuries from the SLR calculation during the COVID pandemic, were you aware of any
this trend
safety,
line told the
soundness, or
story for
financial
sure.
stability problems that arose as a result of that decision? And if not,
Bulls kept
why was
failing
that relief
the
terminated
hold,
in 2021?
and their stops got
It was an
used to push the
emergency
market
measure.
down.
From the beginning and end, it was an emergency measure. I think, my long-held view is that we should have permanent
I think a
measure, and
rule
now
for
we're
this
going to.
orb
And, we have
is
an
if we
open
get
board
erratic
meeting
price
on
action,
Wednesday afternoon,
like news-based price
and,
action,
after I finish my hearing
because
on the
not only
Senate
did we
side,
have
I'm very much
the
looking forward to putting this proposal out
the
before Congress.
Iranian news,
Thank you.
we also
In
had
March, the Federal
Powell.
Reserve, together with the FDIC and the OCC, announced that they intend to issue a notice of proposed rulemaking to repeal the 2023 Community Reinvestment Act and replace it with the legacy CRA framework. Nearly 3 months have passed since this announcement. What is the status of this project?
Well, we're going to do what we said we were going to do. It's just a question of execution, and I think you'll see that coming. This would be so Vice Chair Bowman has the job of sequencing these things, and that one's certainly coming.
Do you intend to issue a proposal that will be a clean rescission and replacement of that rulemaking, or are you considering amendments to the legacy rule?
I honestly don't know. We'll come back to you on that.
Okay, so we should know more later this week?
We might, yeah.
Okay. Finally, I'd like to build off of what Congressman Stile asked previously on the Supervision of Novel Activities program. Do you feel any changes could be made to it to encourage innovation, and do you anticipate any such changes?
Come on, NQ, just give me a win.
do.
God
I
damn,
also
you ain't
think,
got to be nasty like that, dude.
Governor Bowman, now Vice Chair
Damn,
Bowman,
you don't got to be like that.
someone who is actually deeply knowledgeable and experienced in supervision, and that hasn't really been the model. We've more had people who are experts on regulation. I think she brings a particular ability to move supervision in a healthy direction while also preserving safety and soundness. And that's what you mentioned is one of the dimensions in which I think that will be true.
Thank you for your testimony today. I appreciate your service to the country, and with that, I yield back, Mr. Chairman.
Thank you.
Gentleman yields back. The chair recognizes the ranking member of our full committee, Mrs. Waters, for 5 minutes.
Thank you very much, Mr. Chairman. Chair Powell, I appreciate that despite the repeated attacks by the president and his cabinet on you personally, that you stood your ground and you did not bow to pressure from Trump, especially
Maxine
given the
Waters need
current
to just
state
get
of
out of here.
economic uncertainty due to his policy. Last
Oh,
week, the Fed held
come
interest rates
on.
steady.
Come
Afterwards,
on.
you said that
Come
you and
on.
other experts continue to expect a
Come
meaningful
on.
amount of inflation due to Trump's tariffs. You said that it may take some time for the tariffs to work their way through the
You say you never
supply
got
chain,
stopped out?
but that you found, and I quote, many companies do expect to put some or all of the effect of tariffs through to the next person in the chain and ultimately
Thank you.
to the
God
consumer,
damn.
quote, end quote.
Damn.
So while the president may try to claim other countries pay these tariffs, can you confirm that it is indeed consumers and businesses in the United States that will bear these costs?
So it can be anybody from the exporter, the importer, the retailer, the manufacturer, or the consumer that winds up paying these tariffs. In the beginning, it will be the importer that pays the tariff, but ultimately it will be spread out among those five, each of which will try very hard not to contribute. But in the end, the tariff will be paid, and you know, all of the data suggests that at least some of that will fall, not all of it, but at least some of it will fall on consumers.
Well, you indicated it may take some time for tariffs to work their way through the supply chain. Would you elaborate on this, including when is it that we can see negative impacts to inflation from Trump's tariff policy?
So, you know, the things that are being sold at retail now, they might have been put into,
Yo, what's up, gain weight?
inventory before the tariffs in February or March. So we think we should start to see this over the summer, you know, in the June numbers and in the
Man, hold on. I gotta
July
take
numbers.
another
If we don't, I
screenshot of
think
this.
we're learning here. If we
Yeah, I gotta
see
take another
less
screenshot of this.
pass-through,
The Nasdaq,
there aren't
that dude, the
historical
Nasdaq,
experiences
that
we
was
can consult
nasty,
here,
man.
really. So it may turn out that the pass-through is less or
Ah,
more
man, that's
than we
nasty.
think. And I think we're going to be learning. You know, we'll get a number for June. You know, an inflation number for June. We'll learn something then. We'll get it for July as we go through the summer. We should start seeing this. And if we don't, I think we're perfectly open to the idea that the pass-through will be less than we think. And if so, that'll matter for our policy.
Well, you know, I've been talking with a lot of my constituents about these tariffs. And the question that comes up is now, is this going to only hurt maybe the big businesses? What about our small business people? What about the people that we buy goods and services from every day in our communities? Is this going to hurt big business as well as small business?
Yes, I mean, I don't think it's. I think it will certainly. If you're a smaller company that maybe imports a single product, that's a common business model these days. Then you may if your product is tariffed, you may be the one that's affected significantly. Whereas bigger companies have more resources and a more diverse product line.
Why do you think you can resist the president basically telling you what to do? What gives you that authority?
I don't think about it that way at all. I think I have a job that I'm sworn to do, and all I think of is how much people rely on us to get it right. You know, it really matters that we get it right, and that concentrates one's mind, and so that's what we think about at the Fed. We think about what's the right thing. You know, I have, all I want to do in what's left of my time at the Fed is have the economy be strong and have inflation be under control, have a solid labor market. I want to turn it over to my successor in that condition. Of course, that's what keeps me up at night, is to do that. And that's what I think about. That's the only thing I think about.
So how are you protected? By law, by constitution? Where does your authority come from?
I think, I've covered all that. I do think we're fully protected. And again, I don't think about that anymore. What I think about is let's just do our jobs. And that's what we do. You know, we don't talk about those issues at all. And all we do is do our jobs as best we can. And, you know, it's not an easy job, but it's one we've willingly taken on, and very important that we remain focused just on the job and not on other things.
Thank you very much. I yield back.
The gentlewoman yields back. The chair recognizes the gentleman from New York, our Vice Chair for Communications, Mr. Lawler. You're recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, as recently as yesterday, Fed Governor Bowman indicated that if inflation pressures remain contained, the Fed should consider lowering rates, and said she is open to a rate cut in July. Governor Waller said
So price traded above the opening
very
range.
much
Oh,
the same. Do you believe that we are in a position where we may be able to cut rates in
No!
July?
Oh my! Oh no!
I would say this. I think if it turns out that inflation pressures do remain contained, then we will get to a place where we cut rates sooner rather than later. But I wouldn't want to say, I wouldn't want to point to
No!
a particular meeting.
Yo,
I don't
what?
think we
Oh
need to be
my!
in any rush because the economy is still strong. Labor
Oh
market is strong.
my
If we were to
God!
see the labor market, meaningfully
Oh
weaken in a way that was
my
concerning,
God!
that would matter for that
Oh
decision.
my God!
And if we see inflation,
Oh my!
continuing
Oh
not to
my
move up,
God!
we hadn't expected inflation to move up
Oh
much. We do expect it to
my
move
God!
in the summer, and if we see it not
Oh
happening,
my
we'll
God!
learn from that.
I'm
The
not
September
ever trading the
2018 Teal
Nasdaq.
Book suggested that the
Fuck
Fed,
the
seeing
Nasdaq.
through tariffs'
Oh
inflationary effects,
my
is an
God!
appropriate response so long as
Oh my
inflation
God, dude!
expectations are firmly anchored and that the pass-through costs are relatively
Bro, I think I
short-lived.
blew the account.
Would you agree that
This
this
account is probably
assessment
gone.
from the Teal
Oh,
Book
it's not.
still applies to today?
I probably have
I would.
like,
Those are the
yo,
exact
what the fuck,
factors that we cite when we talk about this situation. Plus the
bro?
size of
What
the
the
tariffs.
Right.
fuck?
So let's assess the
Ah,
current economic situation. The Monetary Policy Report states that
I'm not.
longer-run inflation
And y'all
expectations,
guys talking about I
quote,
don't trade the
continue to
Nasdaq. This is
be
exactly why.
broadly consistent with 2%
That's exactly why.
inflation, end
What
quote.
in the
And a Harvard
actual
study
fuck?
argued that despite the relatively quick price responses to tariff announcements, the overall magnitude of these changes remains modest. So if these conditions hold, is it not unreasonable to think that underlying inflation trends should continue its path towards 2%?
That's certainly a very defensible position. I think what what people, others on the committee think, and what I think is that this is a question we need to be careful with because it's different than it was in 2018. The difference is that we haven't had 2% inflation. In 2018, we hadn't had an inflation as high as 2% for a decade anymore.
Right.
This is a different situation. We haven't fully restored price stability, and another shock. We have to be careful if there's a meaningfully large and sustained inflation shock. We have to be careful about that. And so, I think we're just trying to be careful and cautious, and we really think that's the best thing we can do for the people that we serve. If that happens, we need to be there for it. And so, we're in a difficult situation in deciding exactly when to move. But again, if we continue to see inflation come in, and not prove up at the higher levels than we expect, then that would matter for our decision making.
Chairman Powell, economist John Taylor once noted that the Federal Reserve should deviate from its own Taylor rule in the event of an oil shock, similar to the tariff scenario. A one-time price increase from an oil shock should not be accompanied with an increase in interest rates. Do you agree with that assessment?
I generally do, yes.
Previously, you said that if you wait for inflation to get back down to 2% to cut rates, you are already too late. You also said in November 2024 that inflation was on a sustainable path to 2%. Given that the FOMC believes that interest rates now are moderately restrictive and that an oil or tariff shock may not impact underlying inflation in a significant or meaningful way, because as the Monetary Policy Report established, inflation expectations are firmly anchored, what is the reason not to cut rates?
Well, it's uncertainty about the size and potential persistence of the potential but highly uncertain inflation from tariffs. By the way, we have 5 Taylor rules in the Monetary Policy Report. 4 of them say that the policy rate is in the right range, and the other one calls for a hike.
Right.
Just for the record.
Well, back in the beginning of the Biden administration, okay, when we talk about inflation, they increased federal spending by $2.5 trillion
Bro, what the fuck?
each year.
Yo, I guess the
$5 trillion
the
in new
Nasdaq has
spending.
been
That's
doing
what
me
gave
dirty.
us inflation
today.
by printing all of this new
She's
money and
definitely been doing
borrowing,
me
and yet
dirty. I don't know what
you
I
did
did to
not
her.
respond to that by raising rates. In fact, you were late to raise rates.
She missed my target
Now,
by a
again, we
tick
see a
and then stops
situation
me
where
out.
Gentleman's
What
time
kind
up.
of
late to
bullshit is
cut
that, man?
rates. That is the challenge here.
Gentleman yields back. Chair recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you, Chairman. Chairman Powell, to the best of your knowledge, has President Trump put forward a coherent tariff policy? Is that your opinion?
That is not a judgment for me to make.
I
or
swear,
to
they,
discuss.
man, they just need to do better, man.
Well, what do you think?
Sir, it would be
You- I
inappropriate
mean,
for me.
you're
I don't
running
comment
our
on the president's
economy.
words or the president's
Does
policy.
the president, in your opinion, does he have a coherent tariff policy? You ought to have an opinion on that. You run our economy. This is your bailiwick. Do you think he's got
Where did you see that at,
a
Cave
good
Trader?
policy? Answer me.
Oh, so Gainweight, that
Never
was you?
comment on the president of the United States.
That was a hater move, Gainweight. And that was a hater
All
move.
right. Do you think?
That was a hater move.
What do you think
Yo, what the fuck, yo?
our
That was
policy
crazy.
should be?
We play no role in either establishing or commenting on tariff policy or fiscal policy for that matter.
Let
Not
me
our
tell you-
business. We have a specific mandate. We try to stick to it.
Let me tell you something, Chairman. In my state of Georgia, I got the fastest growing trade group down there. The Port of Savannah is indeed our nation's fastest growing party.
You said that was a retest of the orb?
And it's rising even more. The cost, the expenses, our business community is suffering. And I want to know what you think of our tariff policy.
Auto alert news.
What do I tell my people? What do we tell the American people? And you're a good man. I want to know the answer to this question. I want to know how you feel. This whole tariff question, it's a tax increase. It's running people out of business. What do you think about that? Give me some sort of answer. Do you think anything about our tariff policy? Don't you feel you
I
have a
mean, Gainweight.
responsibility?
That was a crazy
Are you
candle.
afraid of
That was a
President
crazy
Donald
candle, man.
Trump? Why don't
That
you
was a
deal
crazy
with
candle.
this? Because
Price was
our
literally up here.
economy
Why the hell would I think that
suffering
price
in
was
a
going to come
mighty
back down to
bad
this trend
way.
line
And
and take me
I've
out?
got to represent my
Fucking
constituency.
NASDAQ, yo. That's so crazy,
And
man.
they are, let's take Georgia's agricultural sector, mostly pecans and poultry and cotton exports. They've been hit hard by retaliatory tariffs from key trading partners like China. Why are you
Man, I
running
just
away
hate the
from
fact,
the
I just hate
tariff
what our
fight?
government has become.
Give us
They
some
just use all moments as
understanding of that.
political rhetoric. Why the hell is he talking to Powell
This is just
about some
not our
shit
role.
that he
We
has
are-
no
we are
control
not
over?
an institution.
They're just talking
comments on
shit.
or analyzes
I mean,
decisions that the president makes, or the things that he runs for office on and is elected on.
talking about
We don't.
all kind of
that's
shit
just
that don't matter to him.
completely
Like,
out of our
dude,
lane.
why would he
It's
care about
totally
any of that
inappropriate
shit?
For me to have any
He's
comment
just trying
on
to.
that. I'm sorry to say, Mr. Scott.
We're having these regional disruptions. Our economy is in a bad way. And I want to see you and the president. You got to get together on this.
Man,
We
come
got
on, NQ. Stop being like that,
in
man.
Georgia. We got peanuts.
God.
We run the biggest group. We got the fastest growing trade mechanism in the Savannah Port Authority. We're crushed in Georgia. My business folks are coming to me on it.
Someone
gotta
probably
get
told him the
some
way that he
answers from
talks, it soothes people.
do I tell
I don't understand how anybody talks like that.
that the Fed chairman feels about their experience in this terror? I think
Come on, NQ.
I think we need to get you and the president together.
Gentleman's time has expired.
Thank you.
Appreciate the gentleman from Georgia. Gentlewoman from Florida, Ms. Salazar is recognized for
Yeah, they need
5
some new
minutes.
blood. Is this Congress?
Thank you
Yeah.
very much for being here.
I kind of hate listening to all these old people talk about shit that don't matter.
Miami, which is one of the cities most composed of Hispanic Americans and people that adore living the American dream. So putting that into context, I wanted to ask you a few questions about the labor force. We agree with what the President Trump is doing, or what the administration
I think the Nasdaq is going to come and stop me out because it looks like it wants to pull back to that 21 EMA.
Any type of crime, even more if they are illegals. And but we do know that unfortunately what's happening right now after 6 months of being Mr. President being in office, that we're losing thousands and thousands of workers.
I guess, man.
What,
I guess.
leadership has called.
I mean, I understand. I mean, I understand the game, but my God, man, nobody that is voting for them is watching this shit.
President said
They're
the
at
other day
work.
in a tweet that he understands that that those hands are needed. We're talking about 15% of the economy: construction, hospitality, and agricultural. So my question to you is, what is the economic? What is the growth effect
Yeah,
on
the Nasdaq
economy
is not my friend today,
with
man.
this type of removal of people?
She is not my friend today.
Hands being removed from those three main top sectors.
So immigration is another area where nobody put us in charge. We're not, Congressional Budget Office and other agencies can make assessments like that. We do have a role to maximize employment, but we take immigration policy as we take it as it comes. What it's obviously done is it's really reduced the amount of growth in the labor force. And so at the same time, demand for workers has been coming down as well because they've been coming down at about the
one
same.
drop at a time. Reduce the growth. Why don't we talk a little bit more? Because we want to continue growing. We're the #1 economy in the world. We need to continue growing. So you're saying that what's affecting the growth?
Well, there are two things that affect growth. One is growth in the labor force, more people working, and the other thing is productivity. How much do they produce per hour worked? And when you significantly slow the growth of the labor force, you will slow the growth of the economy. But I think again, it's not for us to have a view on immigration policy.
Oh, no, I
can just
understand. It
report
was
that.
just my comments, but you do agree that if we don't have those hands, then we don't grow.
I think that growth will slow, and actually is slowing this year, and that's one of the reasons.
Well, we don't like that. So now let's talk about of the next 10 years, 2025 to 2035. Americans are not having enough kids. So that means that we need other people, right? So over the next decade, based on the current trends that I
That's
just
crazy.
explained to you and that you just
I mean,
reiterated, will there be
on
enough
one hand, they're saying that
workers
Americans not having enough kids, and yet
the labor needs
on the other
of our
hand,
economy
you
between
promote
2020
the abortion of
to
children.
2025
How does that
and
make sense?
2035?
So I think
But I
labor
understand it's not
economists
meant to make
do
sense.
see-
It's
they
only
do
meant to
observe the
cause
phenomena
chaos.
you're talking about, which is
I get it.
demand for labor going to be met by the domestic population, the native-born population? And the answer appears to be probably not over the next 10 years.
And then what about if we do not have that labor force over the next 10 years? What happens?
So many things will happen. You can see a big increase in productivity, which would mean we don't need as many workers. For example, artificial intelligence could be implemented in a way that creates widespread productivity gains. I wouldn't count on that, but it's a
You
possibility.
would not. You would not count on that?
I wouldn't count on it.
You would not.
No, I mean, I think
Why
there'll
not?
be gains because with productivity enhancing things, they typically take longer to be implemented, and then it takes a while for the gains to be shown. I think in the case of artificial intelligence, those gains are coming, but they may take longer or be less in the beginning than expected.
And during the time that those changes happen, then what happens? Our economy doesn't grow. Is that what you're saying?
Yes, but I mean, those who make immigration policy are entitled to weigh these factors. You know,
No,
we,
no, I
we can
hear you.
report on what happens, but it's
know that.
really not our job.
I understand it's not. I just want to hear what you're thinking, what's your expertise based on those immigration laws that we're implementing right now. The last thing, because I only have 30 seconds. Do you think that with everything that we have talked about, do you think that we can continue remaining, or the United States economy can continue being the #1 economy in the world, and that we could compete if we were to have the immigration laws that we have right now?
I think you could have, you know, the highest per capita earnings, but if you're talking about the aggregate output, then, you know, population growth may be a constraint.
Now, which one of the two is more important?
Gentleman's time has expired.
Good question.
Well, you can, I think
Gentlewoman's time has expired.
All right.
Let me turn
Thank
to
you,
the
Chairman.
ranking member of the House Intelligence Committee, Mr. Himes, for 5 minutes.
Thank you, Mr. Chairman, and welcome, Chairman Powell. Let me start by thanking you for your careful keeping in your lane and steering clear of fiscal policy, and in particular for your stalwart defense of independent monetary policy. You're getting pressure from very powerful places and lots of kibitzing from lots of members on the interest rate question, and most know better that our independent monetary policy is the very bedrock of
honestly,
our economy. So thank you for that. Mr. Chairman, I want to talk just a little bit about
this what kind of makes me not
some of the
care
technical
about
matters
trading
associated
kind of
with
heavy.
energy prices and
Because
inflation,
even though
obviously turmoil in the Middle East has sent
even though I
oil
got what
prices,
9 mini
swinging
contracts
wildly
on
with
right now,
West Texas Intermediate in the last
I'm up
month or so
about what
being
20
anywhere
points
between
almost,
$61 and
and I'm only up
$75 a barrel.
$3,000.
We
It's
recently
not
saw
worth
the
the
Iranian
stress,
parliament
honestly.
vote to close the Strait of Hormuz.
Well, I'm not
which
saying that
currently
I'm
handles
stressed
around
out.
20 million
What I'm saying that
barrels a
it's not
day,
worth the
a
stress
fifth of
of
global demand, and a
trading
little bit
heavy
more in terms
size
of
if
natural
I'm not going to
gas.
see a lot of money in a short time
Chair
frame.
Powell,
Does
you
that
said
make
last
sense?
week that conflict in the Middle East in the 1970s resulted in very large inflation shocks. In contrast to the 1970s, today the United States does not import most of its energy. We call ourselves energy
Well, I got my
self-sufficient
money back.
on a net basis. But I hear the argument made that I think is
I
wrong.
got my money back.
Because we're energy self-sufficient, somehow we are insulated from global energy market prices. Can you comment on that? Is there any validity to the notion that we are not, American consumers of energy are not subject to global swings in energy prices?
Yeah, so the price of oil is set globally, right? And I think if you go back a few years, the thought was that when we had a natural shock absorber, which is that we would just drill more. And that we would, if prices went up, we would drill more. And so you wouldn't have these sustained price shocks that we had during the 1970s and the original OPEC era. I think that is actually in question now because, you know, the oil industry in the US is being much more careful and focused on return on investment than they were, having been burned with overcapacity.
Right, and I mean, yeah, in the long run, you can invest in additional extraction technologies, but this does not respond to day-to-day spot prices. So
not quickly.
The point I'm trying to make is that the conflict in the Middle East, if it resulted in $120 barrel oil, which is where oil was in 2022, that would have a fairly substantial inflationary impact on the American household. Is that correct?
We would certainly feel that, you know, and as we've discussed earlier, there's a lot of lore around looking through oil price shocks, but that depends on the facts and circumstances.
What, as a technical matter, we tend to refer to CPI, which is a basket of goods, and we measure the price changes. Roughly speaking, what percentage of that basket is comprised of energy?
All right, so I got 4
It's
screenshots
much less than it was.
for today.
Of course, the oil
Man,
consumption is much less than it was in the 70s.
you can see that this trend line was very pivotal in today's orb. The market was sweeping liquidity up and down this damn trend line, man. Caught your boy Sharm twice.
So much natural gas, so that'll always be there for us.
Before I was able to get something going, man.
What's going to happen in the Middle East in an hour, much less in a week or a month or a year. But as a technical matter, at what price for a barrel of oil does the American household begin to feel inflationary effects?
Well, I will say that even though today was definitely sketchy, that orb
I don't want to throw out a number.
Even though the market faked out that orb like 10 million times. I know Cave Trader is still in it. He's waiting for
I
432.
wouldn't want to throw out a specific number. If prices went up materially,
Everybody
people
else
would
that took
feel that.
profits, man, if you didn't take profits as soon as it was given to you, man,
Again, I
it's
think if I look
man.
at the data here,
So I mean that opening
WTI per
range was
barrel, about 120, it
at
peaked
this
at about
candle here at
$120 in 2022.
327. So I'm actually gonna move
What
this
do
down
your
to
models
327.
suggest would occur to inflation, and how would it influence the Fed's thinking?
That was
should
the
we be
break
back
of
to
that opening range
$120 a
right
barrel?
there. And I'll turn it.
Well, let's just say there's a big price spike.
I'll turn it green.
That range. So we would look at that.
So
and
that
we
was the
would
break.
ask
Look how many times
ourselves,
the market
look at the
manipulated in this
situation, we would
area.
ask ourselves,
You
should
get
we
a
react
break.
to that? So, for example,
You got
during
the
what we call
pullback, the
Arab
break,
Spring back in the early teens,
the
oil
pullback,
prices went
a
up a
second
lot,
break.
and that
So I
went into
guess
the price.
anybody that
And
waited
there
for
was a
this one
discussion,
right
and I think
here,
the right
they
answer
got
was to
super
look through
stopped
that.
out. And that's probably where
Question you'd
this
be
candle
asking
even,
yourself, because by
it's
the
probably where
time you
all the
react,
stops
the price comes back down. I think
right
the
here.
question today would be,
Everybody that
is
was
the
in the
situation
opening range
different?
breakout here on the
What are the
Nasdaq
implications of those
got
changes?
stopped out.
Gentleman's time has
But
expired. I thank the gentleman from Connecticut.
if they got back
Chair
into it,
recognizes the gentleman
well,
from North Carolina, Mr.
the
Moore.
price
You're
never
recognized
came
for
back. So
5 minutes.
I got to write that down.
Mr.
So
Chairman.
you
Chairman
had
Powell,
two
I
fake
wanted
outs
to
today
touch
on the Nasdaq.
international
You had
standard
one
setting bodies like the Basel
and you
Committee
had
on
two
Banking
fake outs. So I got to
Supervision.
make sure I write
Their
that
goal is to
down.
promote better
Two
harmonization
fake
for
outs
global capital flows
before I
and
forget. Two fake
regulatory
outs.
standards. But the Biden administration's implementation of Basel III endgame demonstrated the pitfalls when the U.S. is a follower instead of a leader in the international arena. That's why both Democrats and Republicans shot down former Vice Chair Michael Barr's proposal, which made capital less acceptable and put U.S. firms and businesses at a global disadvantage. Do you agree that the United States should only implement international standards in a way that is consistent with our own domestic legal and regulatory scheme?
I do.
I appreciate the Federal Reserve's announcement yesterday to end the use of reputational risk during banking examinations. This supervisory practice was used as a tool to pressure banks to refrain from offering financial services.
So I'm going to refine
politically
this before
disfavored
tonight. I'm just, this is just a rough draft
What further steps is
so
the Federal
far. So
Reserve
price
taking
traded
to help
above the
usher
opening
in
range
these
high for the
changes,
second
such
time,
as ending
and buyers failed to
examination
hold the
practices that
breakout.
informally
The
encourage banks
M&Q had two
close
fake
certain
outs before
accounts without written
successfully breaking above the opening range,
So we're
or the opening
developing,
range high,
I
and
should say Vice Chair
trading
Bowman is
to the
developing
upside.
a range of policies that will help in that area, and I should let her
I'm going to
speak to
refine
it.
this later on,
As
but
you
I mean,
know,
we got the
we've eliminated
screenshots.
reputational
What I
risk
probably what I should
largely
do
in a thoughtful
is,
way from those things.
I guess moving forward, maybe I should just start marking these. So when I
More aware of
look
that
back,
problem over the course of last year, and
yeah, just start adding
legislation
text or
decided
something
to
like
move
this.
away from
Where's
that.
my text
We're
box?
very conscious of the fact that we shouldn't be telling banks who they can lend to, that's a
Okay,
decision
so
for them in the private sector.
trend line break.
Let me ask you this, how are you ensuring though that like the frontline examiners are aligned with this new direction and not
Make
continuing?
the text like yellow so we can see it.
You know, I will say that is the ultimate question is will the, and I think they will, and I think.
Alright, so you got your trend
as
line
a former
break.
bank examiner, Vice Chair Bowman is actually very well positioned to engage with supervisors and in a way that someone with experience can do successfully. Whereas if you don't have that experience, I think it might be harder.
Thank you. You know, Secretary Bessent recently announced a drive to change the culture of supervision through improvements to examination procedures, enhanced monitoring of examiners' compliance with those procedures, and more realistic
Got a false
processes
breakout
for
right
appealing
here.
supervisory findings. That
And they
includes
have a
defining
second false
unsafe and
breakout right here
unsound by
too as
rule,
well.
using more objective measures rooted in financial.
False breakout.
Do you support this initiative, and will we be seeing further rule changes at the Federal Reserve to achieve this goal?
So I like the sound of all that. I will say on issues of supervision, Vice Chair
False
Bowman
breakout.
has significant
False
authority, and
breakout.
also she's got the background and the understanding. And the first thing I would do is I would ask her what she thinks about that.
Just sort of a changing direction on a couple of questions. During the volatility in the Treasury markets last April, some have speculated that foreign investors were dumping Treasury securities. Since then, though, recent data has showed that foreign investors' holding of U.S. Treasuries held close to a record high in April. Does this data show that Treasury's safe haven status and the dollar's global reserve currency status remained strong while the administration conducted trade negotiations?
I would say yes to that. I think we need to be careful about these narratives that pop up quickly. I mean, we're the world's reserve currency and the world's greatest democracy, and I think the dollar and is always going to be, you know, for a long time, is going to be the reserve currency and the place
For
where
a long time, it's going to be reserve
Let me ask you this,
currency
do you
with
believe
regardless
there's a
if we like it or
possibility
not.
that Treasury markets will crack just as Jamie
Because if
Dimon
it's
has
not, we all
recently
know what the
warned that
what the
Reagan
United States will do when it's not the reserve currency. We already
I
saw
don't want to say things
an
like
example
that.
of that already.
I don't think that's something that's happening. Treasury markets are functioning well.
We lied and said that
normally, and
somebody
they
had weapons of
function through a period of pretty
mass
substantial
destructions when they
stress.
tried
And as you
pulling
pointed
that
out,
bullshit
Mr. Moore,
the first
they're
time.
focusing well now.
With that, I yield back. And actually, if Ms. Salazar is still here, I'll give her my remaining time. If not, I yield back.
Gentleman yields back. Chair recognizes Ms. Williams of Georgia. You're recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being here. It's been a while since I've had the opportunity to ask questions sitting at the bottom of the room, but I am happy to have this conversation today because the last time we talked, last July, I mentioned that combating economic inequality is a critical part of the Fed's dual mandate, and that is something that I am deeply, deeply interested in. Back then, we were talking about how we can get everyone in our economy to have the opportunity to contribute to their fullest potential, because that's how we get our economy firing on all cylinders and work to continue to close the racial wealth gap, which my home city of Atlanta continues to lead the nation in. That seems like such a far cry from where we are today, almost a year later. Forget our economy firing on all cylinders. Now our economy and our nation seem to just be on fire. We're looking at tariffs that are raising the prices of groceries, fuel, housing, and everyday goods. Chairman Powell, I get feedback every time I'm in a hearing about my nails because I like to get my nails done.
What
And
the
my nail
fuck?
tech
Oh
told
my
me about
God.
the increased
No
cost
way.
of so
No
many of
way.
the different products that would be used just for me to get my manicure monthly, because
Oh
tariffs
my
are
God.
frightening so many of our small businesses,
Oh my
which we know
God.
are the backbone of our economy.
Honestly,
And
I feel
so
like I
it's
lose a
hurting
couple of
my
brain
community
cells
in
every time I
Atlanta.
listen to stuff like
But
this.
it doesn't seem like our president and my
I
Republican
swear,
colleagues
I
are
feel
really
like I lose a
interested
couple
in
of
making
brain
sure that
cells.
our economy fires on all economies, on all cylinders, as long as billionaires continue to get richer.
She's regardless, she don't
Because
care about
that's what we've
like, dude.
seen and all of
I
the
swear,
gutting that has been done to the federal
that is like the
government.
most stupidest shit
And
that I've heard, man.
Chairman Powell, I'm sure that this is
This man does
coming
not care
to
about you getting your goddamn
your
nails done. I can't
department
believe
as
she said
well.
that shit.
With the recent events
I
that we've
understand where she was going
seen,
with
we
it,
know
but
that
that
it
was
is
stupid.
very
That was
dangerous
stupid. No one
to
cares
gut
about your
the
fucking
federal
nails.
government,
You're gonna get them
agencies
done
that we
regardless,
depend on,
regardless
and
how much they
politicizing
cost.
the work of agencies such as yours. Chairman Powell, this current president has tried to reclassify tens of thousands of non-political public servants just to make it easier to fire them. And that includes people who have served in Democratic and Republican administrations. It even includes people who serve in independent agencies just like yours. Chair Powell, as a chair who our current and previous president routinely has threatened to fire, I think I just heard something on CNN today while you were here testifying. But what effect has this policy had on the career civil servants in your agency? And are these threats making it easier or harder for the Fed to do monetary policy?
They're having no effect. We're doing our jobs.
All right, so we'll listen to this for 2 more minutes.
Your job, even
I
when
gotta
it might
actually
not
get
be
ready
easy.
for
It is important
my
to
meeting.
tune out the
But
things that you hear on the media, because I hear it every day representing.
I don't think she's gonna say anything important in the next 2 minutes. She's talking about her nails getting done and stupid other shit. Okay. All right, so I think we're going to I think we will start documenting the range breakout like this. I think this is very helpful. Instead of actually, I'm gonna just delete these screenshots right here, because honestly, this doesn't even tell a story or anything. I don't know what's going on, so we'll keep it simple. All right, we don't even know what's going on right now. So yeah, so obviously that's the opening range. We had 2 false breakouts of the opening range. We had a trend line break, a second trend line break, but the bulls were actually finally able to kind of hold that pullback. So Oh yeah. She might actually say something important. You're
that
right.
has a lot of federal employees, a lot of people who work at your agency.
It's not our job to speculate on things the president might do.
So what impact do interest rates have on on housing access?
Over the long run, they don't really.
Come on, NQ. Don't do this to me. Don't keep grinding up. Pull back to that 21 EMA and tag me in.
Well, not on the supply, but on the housing market. The supply is separate that we need to address going into this. If we're going to move interest rates up and down, that's not going to be the end all be all to getting people into housing. We must address the housing supply crisis. But what impact do interest rates have on the housing
Now this
market
thing's been grinding up now.
Well, interest rates really.
This thing
affect
better keep the
housing
same
demand.
goddamn energy.
With lower rates, you see more.
Keep
demand.
on going.
Higher rates, maybe less demand.
Thank you, Chairman Powell. I am out of
Keep
time,
on going.
but I have lots of
Had that
questions
same energy you was
continue to
having.
work to close the racial wealth gap in this country, specifically
Come on, baby.
focused on my
Come on,
district in
baby.
Atlanta,
Pull,
where it is so
push.
prevalent. Thank you so
Push,
much.
push,
Gentleman's time has
push.
expired. The gentleman from Indiana, Mr. Stutzman, is recognized for 5 minutes.
Thank you, Mr. Chairman. And Chairman Powell, great to see you. And again, as I've mentioned to you before, always appreciate your steady hand at the wheel and not, I guess, getting out of your lane necessarily, but obviously you have a huge impact.
Push, baby.
On,
Push,
the
push,
economy and
push,
what's happening
push,
there at the
push.
Fed. I want to kind of follow up a little bit.
It
on
was the
housing, 'cause
nails that did
I've
it.
been hearing a lot about
It was the
housing,
nails. We got to make sure her nails are done.
concerns in Northeast Indiana.
We got to make sure the
I know,
nails are
you know,
done.
you're not,
That's where we're getting this push.
You're used
Push
to
it.
being
Push it
beat
to
up
the
on
limit.
a lot by
Push
folks
it.
all around the country, but I want to speak specifically to one
Nails,
particular
nails, nails.
individual, Grant Cardone. He made some pretty strong remarks about your policy when it comes to the housing industry.
Okay. All right,
And,
guys.
he said,
Damn it,
that's why
NQ.
you have
Why can't you just do the
500,000
things I
more
want you to
homes
do?
listed than buyers for those homes. When the rates come down,
Oh
prices
shit.
will also come
Oh,
down.
there
with
goes
it
that high right
because you'll
there.
have more supply in the
I am
marketplace,
playing
and
Russian
supply is what
roulette right
controls
now.
prices.
I am definitely playing Russian
He went
roulette.
on to say that, interest
If it
rates do
doesn't
not
break above
control
that high,
prices, and he explained that lower rates could stimulate activity in the market.
I need to grab my
and
stop in.
activity is what makes the economy work. And I agree with his comments, overall, but
Actually, you know what? All right. No, I'm not going to do this.
economy seems stable.
I'm not going to do this.
And
I was
would
able to
agree
get
with
my
that
money
coming
back.
from an ag and
Nah,
manufacturing area. It's not
I was
booming
able to
yet,
get
but I
my
believe
money
most
back.
people are optimistic that good
Nasdaq, why
times
are you
coming
doing
and that
this? Why?
structure is
Why?
setting in place. But when it comes to housing,
Nasdaq,
it
why?
seems like that's where a lot of Americans they're stuck. They've had low rates, they've got a good mortgage rate, but if they want to make a move, they have to go out of that 3% interest rate into, 4.5%, 5%.
This thing's going to pull back eventually. I think it's going to, as soon as I tag
rate.
myself into it, that's when it wants to
Thoughts
pull back.
addressing housing, because their prices are up for sure, but there's no activity. The velocity is very slow. Would you like to comment on any of that?
Sure. So yeah, we see the same thing you do in the housing market.
But
It's
anyway.
tough. There's not people are locked in. They can't afford to get out of their house because the cost of getting to a higher mortgage, higher price mortgage would be a lot. So the best thing we can do though is to get inflation sustainably down to 2% and have it stay there over a long period of time, and that is really what we can offer to them. And I think.
All right, man.
So if you go back to the beginning of the pandemic, when we cut to zero and we did all those programs, we really saved the housing industry because they're the front line for interest rates. At a time like this, when rates are, I would say modestly restrictive, not even moderately, but modestly restrictive, they feel it, and their customers feel it. We understand that, but we only have one tool for the whole economy, not just for housing. So it's something we consider, but we have to consider the bigger picture. And I do think in the medium term, as rates come down, you'll see normalization in housing. Of course, there'll still be a national housing shortage. I don't know about your district, but
yeah, no, there's a shortage.
I'm going to make an assumption that everybody's shorting today's high.
Interest rates.
So we could see a stop run, but it
consideration do
could
you
be
take
fast.
housing into that decision.
I think there's a lot of
as
people
you address
shorting here,
interest
so
rates?
If
We're
the
always
Bulls
briefed
can
on it,
kind
we
of push
always
through
talk
this
about it, we always look at it,
and
but
not
at the end of the
fall
day,
and not
it's
falter,
it's the big
we should be good.
U.S. economy, the whole aggregate thing that matters. We also
Of
talk about the
course.
agricultural economy a
Of
lot as well,
course.
but ultimately in
Of
manufacturing,
course.
it's
The
got to be the
pullback to the
whole
21.
and
No, of
not any one
course.
particular piece.
Yeah, I just, would mention it is hard for American families to make that move and they're stuck. And so I would just, highly consider, ask you to consider that piece of it, because when Americans can't move and Americans can't upgrade or move laterally even, it really keeps the economy kind of holds the economy back a bit when Americans don't have that. But again, I want to say thank you because you have a tough job, but I haven't heard from anyone in my district asking interest rates to go up. So I'll just pass that along from Indiana's 3rd district. So with that, Mr. Chairman, I'll yield back.
Gentleman yields back. The chair now recognizes the gentleman from Colorado. Ms. Peterson is now recognized for 5 minutes.
Thank you, Mr. Chairman, and great to see you, Chair Powell. Thank you so much for being here today. I want to
Come on, NQ. Give me what I want. Come on. Give me what I want.
I know that you've served under many Democrats, Republicans. You've always been nonpartisan and done your job to put our country first, and we appreciate your steadfast leadership. And if you are not reappointed, it will be very missed here. I have some concerns when I think about, I know you've touched on this.
Man, the NQ is just so nasty. Give me what I want.
But around the independence of the Federal Reserve, your job, no matter what president you served under, Republican or Democrat, was to make sure that this was not a political position. While
Did she really pull the
news that
no
some
way?
Would
No way.
not be happy about because it reflected what you had to do to address inflation. When I think about the conversations we've had going through the global pandemic and the economic fallout and how we had to infuse money throughout our country to keep our services afloat.
And she really brought her son to work. That's crazy.
And while we suffered from inflation,
Or
like
what is
the
that, a
rest
girl?
of the world, we had
Anyway,
to
she
keep
brought
our
her child to
strongest
work. That's
recovery.
crazy. Dang.
We were leading.
Thank you, NQ. That's
And
all I was
so much of
asking
that
for.
was because
That's it. Just
of
break
your
even.
leadership.
That's it, baby.
And so when
Damn.
I think about
That's all I was asking
what this
for.
position
No way.
means, how important
No,
it
what?
is that
What?
there's
I was down 700.
independence. What are your biggest concerns about a potential successor that doesn't prioritize that and wants to do what is politically asked of them versus what they need to do for the country?
Come on,
And
baby.
what are their long-term
Stop playing with me.
repercussions if you're not acting?
Hey, all I'm
on
asking is for is break
addressing
even.
the
That's it.
economic
That's not even
uncertainties and
hard.
Trying to address inflation.
God. Give me my break even.
On that, but I would say, the credibility on the Fed on price stability is very, very important. People believe that we will bring inflation back down to 2% over time. And once if they really do believe it and it's true, then that'll have big effects on not just short-term rates but long-term rates. If that were to be called into question,
Man,
you
that
would
is,
see
man,
long-term
oh
rates
my
go up.
God.
I mean,
Oh my-
that credibility
This is why I
once
hate her.
lost is very expensive to regain.
Yo, this is why I hate the NQ, man. Come on.
So I just think I think people should understand that credibility on inflation is hard won and something we need to constantly tend. And that's what we're doing with our current policies, just being careful with potential inflation risks. We haven't overreacted. In fact, we haven't reacted at all. But we're being a little bit careful about that set of questions as we decide what to do next.
And thank you for bringing that up. As we look at where we were, how far we had come in our economy, things were starting to stabilize, and we were starting to finally see a relief on the interest rates. They were starting to go down. Now they're holding steady. Can you talk about why the instability? When we look at tariffs around the increase in the deficit by the proposed big ugly bill that is being brought through Congress right now and increasing our debt by trillions of dollars and having our credit downgraded again because we are increasing our deficit.
No, there is no way that I was, dude. Why is she doing this? Yo, why? How is this possible? How? There is no way that that thing
steady to
pulled
address
back
things.
enough for it to only be
that
30.
correct?
No way, dude. How is this possible?
I'm sorry, could you just
How is this
briefly
possible?
restate your question here? I apologize.
Yes,
How
I
is
really
that
do. That's the
possible?
best
There
I
is no
can
way
with
that has no way.
Sam here. That with the with our
How
having
is
to
that
address
possible?
inflation, as we've started to see it, you were able to decrease the rates. We were starting to go down a little bit. We were seeing that our economy was finally in a solid place. Prices were starting to go down. And now with the economic uncertainty, we're starting to see
Okay, I
we
think
needed
I
to
should.
hold steady,
I
whereas
think at this
everyone was
point I'm probably pushing my
before
luck.
this administration came
At
in
this
with
point,
these
right?
changes, that it was going to continue to go down. Can you talk about why you have had to choose to hold steady on the interest rates?
So we just, we stick to what we're assigned to do.
Man,
which is
all I
maximum
was
employment
asking
and
for
price
was
stability. We don't have
$300.
opinions on fiscal
I literally
policy
put
or
my
trade
stop up.
policy or immigration policy or any one of another regulation policy, other than that we have our regulatory responsibilities. And so we take what comes as it comes. And, elected politicians do what they do, and we don't criticize that. We don't have opinions about
Gentleman's
that.
time has expired, and the gentleladies.
Thank you, and thank you, Sam.
Chair now recognizes the gentlewoman from Texas, Mrs. De La Cruz, for 5 minutes.
Thank you so much. And thank you, Chair Powell, for being here with us today. I am Congresswoman Monica De La Cruz, and I am from Deep South Texas, a largely Hispanic district, a rural
All right, finally.
community right there
No, you
on the
know what? If
border
this
of
thing's just going to
Texas
cheat me,
and
that's fine.
Mexico.
That's
I
fine.
serve as the vice
There is,
chair
dude,
for
there is no way. I was
Housing
literally
and
up 200
Insurance
bucks.
Subcommittee. And
God
it's difficult for
damn.
families right now to afford a
All right,
home
okay.
on
I'll take
an
it.
average
Fine. We'll come back
paycheck.
tomorrow.
I'm committed to finding
Fine. We'll come back
affordable
tomorrow.
housing
I'll accept
solutions
that.
for the people
Fine.
in my
Fuck.
community,
Fine.
but
All right,
also
guys.
for all
That's it for
over the
me.
nation.
We'll definitely
So,
come back
Chair
this
Powell, mortgage
tonight, and
rates
we'll
remain
definitely look for more opportunities
significantly
to earn some more
elevated
money.
relative
And
to
with that said,
Treasury
peace
yields,
out, everybody.
with spreads well above